All right. All right. Appreciate you guys who are here live attending the mastermind class this Saturday morning. Or I also appreciate the ones that are probably watching this recording at a later time on their own account. So, I absolutely love teaching this class. This is my favorite thing to do is teach this class. This is a lengthy class. We will be here for a few hours. Again, this class is scheduled from 8:30 to 12:30. It's a maximum of 4 hours. I usually get it before or right at the deadline. But the beauty about this class is it is a one and done kind of thing. It is not multiple sessions. It is not multiple weeks, multiple days. You don't have to keep coming back for a different topic or subject that we're going to be teaching this Saturday, and then next Saturday is on a different one, a different topic. It is a one and done deal. I condense everything into one, just an all-in-one bundle, I guess, kind of special, right? So starting with absolutely nothing on our charts, teaching everything that I know and what I use and look for daily, ending with full chart setups at the end, all of my strategies. So that's the beauty of this class. I constructed this class because there was nothing like this when I was trying to learn how to trade, and a lot of my things were self-taught at first for the first 2 years, just through a lot of research and then back testing. And again, this is something I wish I would have had when I was learning how to trade. So since I didn't have that luxury, I decided to be the one to create a class like this for other traders. So that's the reason why I decided to start doing this mastermind class. I believe, like I said, I think we're probably like 20 classes deep by this point. I've gotten amazing feedback every single time I've taught this class. So I absolutely love teaching it. Whoopsies, let me center that a little bit more. So for quick introductions for the ones that don't know me, if you are not in the premium Discord or in the regular Discord, you just signed up for this mastermind class here. My name is Casey Trades. I have been trading since right before COVID actually started. So around like January 2021 is kind of when I really started to get involved in the stock market, trading penny stocks, trading airlines, and trading the meme names at that time, like your GMEs, your AMCs, your Blackberries, and things like that. That got me interested in options. And now, years later, here I am. So I've been trading since then. Absolutely my favorite thing in the world to do is to trade, sit here and watch the market, chart the market, capitalize and make money when I can. At the same time, I love having a community of other traders around me as well that are eager to continue to keep learning. That's the thing with this market. You have to keep adapting because it's always constantly changing. So it's always good to have a community of other people around you as well, because trading by yourself is almost like the worst thing in the world. So I decided to create the name Casey Trades and a community name for myself on social media. And years later, here we are. And now I've been trading obviously for about 4.5 years, but now January of 2024 is when I quit my job and decided to just focus on social media, focus on trading full time. So now I've been doing it for, about exactly a year and a half. So that is just quick introduction of who I am, quick backstory. So I appreciate everybody taking time out of their Saturday, or like I said, future time for the recording to, get the education that we're going to cover here today. It's going to be a lot of information, okay? It's going to be a lot of information. And we're going to start with nothing on our charts. I'm a firm believer that you should be able to look at this empty chart right here. You should be able to look at this empty chart. I'm going to take all these things off. And you should be able to take trades, upside, downside, doesn't matter, whatever it is, right? You should be able to take trades based off of a naked chart. By naked chart, I mean no indicators, no buy, sell, algos, nothing on here except you looking at the candlesticks, the naked price action, right? No EMAs, no VWAP, no TTM squeeze, none of that. And you're going to draw lines on the chart manually and execute trades based off of, no indicators, no algos, nothing on here. So And then at the end of it, we're going to end with like a full chart setup like such right over here on Webull, or like such over here on the Trading View, right? Look at all these colorful. I have the most colorful chart in the world. I challenge anybody out there in the world who has a more colorful chart than I do on Trading View, who can, and not just for shits and giggles, to actually utilize those things on here. But I love a colorful chart. A lot of people like it to be super simple. Maybe I'll get to that. I do for futures, but for intraday, I don't know. I don't mind the clutter because I can kind of see past it majority of the time. I can look at all of this stuff on here, but at the same time, I can see this right here with nothing on there. So it's the beauty of it. So that is the moral of the story for Casey Trades and Mastermind class. So we're going to go ahead and get rolling. So if the people here attending live in the session, if you have any questions whatsoever, please feel free to type it over here in the chat. Again, live mastermind class right here. Click the little open chat icon, opens up this little thing, chat room where we're at. This is where we will be at today. So as I'm teaching and going through different subjects and categories, if you have any questions whatsoever about what I'm talking about or what's on the screen, please do not hesitate and just throw that question in here. I'm going to toggle back and forth between the presentation, back to TradingView, back over to the Discord quite a few times, and keep up with the chat that's over here. That way I can answer your questions along the way. All right. So let's go ahead and jump into this. This is the Casey Trades Simplified Mastermind class where I teach absolutely everything I believe you should know to be successful in options trading. This is where it all starts. You need to have a solid foundation. You can't just jump in, throw a bunch of crazy indicators, buy, sell, algos, and a bunch of stuff on your screen and expect it to work. You have to understand the basic fundamentals of options trading. You have to learn how to read basic price action with nothing on the chart, a naked chart. And then we're going to add those things as confluences. That's all they are. They're confluences towards your thesis on this chart. There's nothing more than what all these indicators are. It's just extra confluence, okay, on top of your original thesis for what you have. All right. So, of course, the one thing that you have to start with are candlesticks, right? Because that's the only thing we have on this chart. There is nothing more on this chart right now than candlesticks. So another thing too, I trade with extended hours turned on. I highly recommend trading with extended hours turned on. It is just it's really important to look at that data from pre-market and after hours, I think, because market is still moving. There's buys and sells going on at specific price areas, so we need to be able to identify those areas during open market hours when us retail people can trade them. So I think it's important, always going to have extended hours turned on. One more thing, everything I'm going to cover as well throughout this, it works on any time frame, any stock, doesn't matter. Everything I'm going to teach you, you can trade it on SPY, Qs, IWM, Tesla, Amazon, does not matter. You can utilize everything I'm going to teach you on any time frame, 5 minute, 15, 1 hour, 4 hour, daily, weekly. It does not matter. It all comes together. It can all work together on different stocks, different time frames. All right. So we're going to go ahead and jump into candlesticks. Yes, there's a million bajillion different candlesticks. Am I going to sit here for an hour and teach you about candlesticks? Absolutely fucking not. That is going to be boring. Nobody wants to do that. What I am going to teach are the top candlestick patterns that I look for and use every single day. The ones that, in my opinion, have the highest success rate and also have the best risk to reward. So what I mean by that is if I see this thing and you have to, this thing about candlesticks, they need to be in specific areas, which we're going to talk about. Certain candlesticks you want to see come in at specific price points, either at the highs or at the lows. Not just a regular candlestick when SPY is selling off. If there's a specific candlestick at the bottom of SPY, that can potentially tell you something. Okay, so we're going to talk about that. So by best candlesticks, I mean the ones that have, again, the highest success rate, where if I see it 10 times, 8 out of 10 times, I'm usually going to freaking hit that trade and it's going to work out. By highest like risk to reward, by that I mean not just trying to catch a small little move. We're going to risk very little to make a multiplier, right? So risk losing $100 to make $200, $300, $400. Those are the trades that you want to take, all right? Morning star and evening star, you absolutely better freaking believe it, right? So candlesticks, there's a bunch of them. We're going to talk about 6. Okay, we're going to talk about 3 bullish and 3 bearish candlestick patterns, all right? I'm not going to go over, I guess, what candlesticks mean. Everyone should know, like, what a candlestick is, and, like, the lingo that I'm going to use. But these are all candlesticks. So on the 5-minute time frame, each one of these candlesticks represents 5 minutes of price action from the low to the high, right? So you have the the bodies of the candles, which are the fat little pieces in the middle, right? You got your little squares, you got your rectangles in there, whatever it is. Then you have your wicks, which are all the lines that are above and below the body of that candle, okay? So if you hear me talk about body of a candle, wicks of a candle, that is what I mean. All right, so first 3 we are going to talk about for bullish. We're going to talk about a hammer, an inverted hammer, and something called a morning star. All right, all of these candlesticks are something that you want to see at the bottom of a downtrend, okay, and relatively see them as closing as a green candle. So why? Because that means buyers are present at the lows, which means you have a good entry risk to reward to go long and catch a decent move back to the upside. So number 1 is hammer. It's the first one. Under bullish candlestick patterns right here, it says hammer. It is nothing more than a lower wick with a little green square on top of it. It looks like Thor's hammer. You know Thor, the big sexy guy from Avengers, right? What was it, Liam? Is it Liam Hemsworth? I know there's brothers. What's the other one? Chris Hemsworth. I'm pretty sure it's Liam that plays it. It might be Chris. I don't know. The big sexy guy with the long hair from Avengers, right? Thor's hammer. That's what we're looking for, okay? Chris plays him. There you go. Chris is the big sexy guy right there holding that hammer, right? So what you want to see, and look, and everything I'm about to teach you right now, none of this is pre-planned. We are going to do this on the fly. If I pre-planned this, and that's just boring. It's just, so we're going to do things like, literally, we're going to find trades with the most current charts. That is not some chart from a few months ago, a year ago. We're going to use the price action that is right here in front of us, okay? So this is what you want to see. All right. So you see the biggest move on SPY today was this upside. And then what was even bigger is this downside right here. This candlestick right here, this is new low of day, right? Because when SPY opened up, that was low of day from this morning, right here. SPY breaks new low of day with that huge red candle. What comes in at the bottom down here when SPY makes a new low of day? This little guy right here, it's called a green hammer candle. It has a lower bottom wick on it. So you see this long line underneath the little square body right there? That is a wick. What that's telling you is that the price action, at some point, this candle was red and it came all the way down here, right, at the bottom of the wick. Before that candlestick closed in that 5-minute time frame, buyers were present. They pushed the price action straight back up, leaving that lower bottom wick, which is good. That, again, that shows you that buyers are present in this area. If buyers are present in that area, what do you think is a good trade idea? Upside or downside? Calls or puts, right? The answer is calls. So you get a long bottom wick. You get that little green body. It has a really long bottom wick on it. So that is called a green hammer candle at the bottom of the downtrend. So if you take calls, when that candlestick closes, you risk low of day, where that candle just went. What is your reward? Well, the reward is all of the previous price action from the highs. So the high of the day is up here. So that could potentially be your full target for this trade. So if you took calls here and you risk a new low of day, if it breaks the bottom of that wick where the hammer candle is at the bottom of the downtrend, this is how the trade plays out. Ba-boom. So every time it's in the green, your calls are profitable. Every time it's in the red, your calls are red, not profitable. And if it breaks the bottom of that red box, then you exit the trade for a loss. As you can see, it gets a move nicely to the upside. This risk to reward is about 4.28, which means it's 4 times greater than your risk. So if I took SPY calls here, based off this green hammer candle at the bottom right here, I would risk losing $100 to potentially make $400. That is the kind of trade that you want to take. Again, I'm teaching you these candlesticks patterns because they have a lower risk, high reward setup. This is what you want to see. Now, again, I said this works on any time frame, any stock, doesn't matter. So we'll keep it on SPY, but now let's go to something crazy. Let's go to the 1 hour. Again, you want to see it at the bottom of a downtrend. So find a day where SPY is downtrending, which hasn't really been in a while because we've kind of just been cruising to the upside. We're just gapping up and going. Here's a decent one right here, not too bad. It's actually there's actually a shooting star up here too, which is nice. So this is a regular green hammer candle. So SPY, this is at 9 o'clock in the morning. Right before market open, SPY gets this nasty shooting star, which we're going to talk about here in a second, because this is the top bearish kind of reversal, or the first bearish big reversal pattern that we're going to talk about. It gets a nasty long wick on the top, pushes it back down. Okay, that's called a shooting star candle, which means sellers are present right here. What does that cause SPY to do? Get a nasty red candle and sell off all the way down here. SPY makes a new low of day right here. But what does that candle turn into? A green hammer candle. It looks like Thor's hammer. Long bottom wick, green body at the bottom of this downtrend, right? SPY's been selling off since pre-market and at the open. Makes a new low of day. Same freaking thing I just charted on the 5-minute. Now we just put it on a larger time frame. What does SPY do? Ribs straight back to the upside. Where does SPY go? Okay, so this was high of day at 10 a.m. Mark that level. Okay, we're going to do the same shit. Mark that level. We're going to take the calls when that candle closes. We're going to risk the low. We're going to target that previous high day. Risk to reward is 4.09. Wow, would you look at that? It's the same shit. It's 4 times greater. I risk losing $100 again to make $400. Made a new low of day, and it goes back to high of day from the morning. This is the exact same thing that I charted on whichever day it was all the way over here just seconds ago on a 5-minute chart. I just did this again back on April 28th, right? It is literally the exact same trade, okay? Very, very simple. And if you probably drop it down to the 5-minute, we'll see how big of a move it actually caught. Maybe, if TradingView loads. Let's see. Oh, I don't want to go all the way back. It's going to take forever to load. Oh, actually, no, it's right here. Not bad. I just want to see it. Because since it's on the 1 hour chart, this was a hammer candle, not on the 5-minute, but on the 1 hour. So what does that mean? If it's based on the 1 hour chart, imagine the move that happened intraday on the 5-minute. Here it is. Look. Oh! Oh-ho-ho! Ba-boom! Not only that was a 1 hour, what is this little guy on the 5-minute at low of day? What's that little green guy right there with that lower bottom wick and that little green body? That's also a freaking hammer candle. So not only did you identify this on the 1 hour time frame, right? And you saw that, it even gave you a little heads up on the 5-minute right down here at low of freaking day. It is a green hammer candle. This one didn't have it. This low didn't have it. Boom, right here. Green hammer candle on the 5-minute. 1 hour closed, also with a green hammer candle. Look at the move that it caught to the upside right there. Simple as that. Green hammer candle on the 5-minute, 1 hour, boom. Big reversal to the upside, right? That is what we want to see. Are you looking for these patterns once the candle closes? Yes, you gotta wait for the candle to close. Gotta wait for the candle to close. You can always front run it, but you're increasing your risk because technically it has not been validated yet. So yes, yesterday's Morningstar on SPY was a killer. Over 1K in a few minutes with futures. All thanks you for teaching it. Yeah, I caught that on those SPX 0DTE calls. Futures, yeah, would have been a few grand. It was a beautiful freaking reversal. Those contracts went from $260 to 2,400. Absolutely insane. But I absolutely paper handed and sold prior. When you chose the Hive Day, why did you choose that green candle reverses the red one that wicked up and rejected Hive Day? The red candle that was prior was in pre-market. So that wasn't, that was pre-market highs, not like open trading hours high of day. How are you able to tell between low of day and the previous low of day? Simple as that. It's right there in your question. So, like low of day is the price action for the day that we are on. So this would be low of day, right? Previous low of day is the previous day's price action, that low of day, which would be right here, right? So this is previous low of day. So we say previous day low, we say PDL is this yellow line. So now when we trade SPY the next day, SPY would have came down here, right here. This would have been previous day low, right? That is the low from the previous day right there. This is the current low of day right here on SPY for that price action. So after hammer, this next one is a little bit harder to find. It doesn't appear that often, but usually when you see this candlestick, it is an inverted hammer. It turns into something called a morning star. Again, this is something else that you want to see at the bottom of a downtrend. Let me remove these drawings. So we want to see a downtrend day on SPY, and I want to see an inverted hammer. Here's kind of one right here. Which that one's not bad. It's going into the close right there. But I want to see a nice little downtrend right here. So, oh no, that turns into a morning star. I'm actually going to save that one for the next one. Here's another morning star right here. Oh my goodness. Aren't they the best? Aren't morning stars and evening stars the absolute best? Need to find a good red downtrend day with an inverted hammer. Again, inverted hammers I think are very rare to find. You do not see them that often, I'll be honest with you, at the bottom of a downtrend. Here's one right here, but it actually closed red and then formed into a morning star and got a pop. Lots of morning star reversals. Let's see. Let's see if we can find one. Here's a downtrend day right here, but there was no inverted hammer reversals. There's another morning star reversal. Oh my goodness, can we just talk about morning stars already? Here's another morning star reversal. Is this a trend? Between 9:45 and 10 a.m. for the last few weeks, you just keep getting a morning star reversal near the lows. All right, so here's an inverted hammer, very small. But it turns into, here, and there's actually two on this one right here. So you got one right here after a big sell-off, and you have another one that's right here. There's actually a green hammer candle right next to it. I would almost count that as a morning star reversal. So again, all it is, and it's not the cleanest, and these are very small, but it's really hard to find them right now. It's very similar to the hammer candle. It's just honestly flipped upside down but closes green still. So when SPY makes that new low of day and you get a green inverted hammer candle, you can bet that the next move after that is going to be higher to the upside. So it's just that little green hammer candle flipped upside down also at the bottom of a downtrend. So you're going to have your wick on the top and a small green body on the bottom. Most of the time, these do end up forming morning star reversals. So the next candle again would be green, and you want it to stay above, where your entry is, and then get that next pop, to the upside. Let me see if Q's is usually a little bit better than SPY. Look, green hammer candle right down here off the low. Q's is almost, there's an evening star right there at the high. God, I cannot wait to freaking talk about those things a little bit more. Here's a good downtrend. Oh, look at that green hammer candle. Look at this bad boy. Look at that bad boy right there. Makes a new low of day, right? And then green hammer candle rips it straight back higher. Here's an inverted hammer that got invalidated and then it actually played out shortly after. But this is essentially what you want to see. Then they wicked the stop, went down a little bit lower, and then it reversed and went higher. But that's the candlestick right there that you want to see at the bottom of that downtrend. Right, here's one right here. That's it. Right before market open, too. So right before market open, SPY was getting this move down, and then you get a green inverted hammer right here, and then a huge green ripper right after it, and then a huge rip to the upside. So inverted hammer candles, they're very rare to see at the bottom of a downtrend, but when you do see them, I do absolutely take note of that. And then I watch to see if they turn into Morningstar reversals, which will lead me into number 3, which is the most important candlestick pattern of all time for any kind of bull, is a Morningstar reversal. You already know where I'm going to go for this one. Here's one right here. We're about to find a shitload of them. There's a Morningstar reversal. All right, so you want to see a neutral or bullish candlestick in the middle. For this one, it is perfect because it's a bullish candle, which is a green hammer candle. To the left of that, you have a giant red candle. To the right of that, you have a giant green candle. When you combine those three things together, that is called a Morningstar reversal. It is, in my opinion, the biggest reversal candlestick pattern that you can find. It will usually print the biggest moves when it happens, right? So, again, we're doing these at the bottom of downtrends. We want to see a bunch of red candles, and then we want to see this nice green bullish candle pattern come in. Lo and behold, what happens? If you took it off the Morningstar reversal when that candle closed, I mean, it just ripped all day after that, right? That's kind of another one right here, but I'm going to go and do the one from previous session because everyone probably already knows what. If you're on the premium Discord, you already know what I'm about to go do. Hurry up. Let me change the time frame. See if that helps. So the previous price action that we had just yesterday on SPY, right before market close, going into power hour session, I was in the chat and I was driving, and I saw SPY selling off, and I was getting notifications like market's dying, we're going lower, blah, 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 right? So I pull up my phone, I see SPY absolutely falling off a cliff. Market was like absolutely freaking dying. Come on, TradingView, load my chart. What are you doing? Well, I guess I can go right here. We're just going to use this one because it's already right here. Again, neutral to bullish candlestick in the middle. Big red candle on the left. Big green candle on the right. SPY gets a huge flusher. Starts dying. Red candle, red candle, red candle. Look at all these green hammer candles. Buyers tried to step in, gets invalidated. Green hammer candle tried to step in, gets invalidated. What's the one thing that did not get invalidated? Is the freaking Morningstar reversal. I'm telling you, when you see a Morningstar reversal, that's like a double whammy bullish, because a green hammer candle is just one single candle for buyers that are trying to step in to keep SPY from falling off a freaking cliff. A Morningstar is, again, it's like a double whammy. It's almost like a triple whammy with the way that it sets up, because it needs more time, right? Because each of the candlesticks are 5 minutes. So a hammer candle is just 5 minute price action, right? The evening star is 3. So it's more than 5 minutes of price action of bulls stepping in and setting up this candle. And then, like I said, these ones print the biggest freaking removes. Big red candle on the right, neutral to bullish in the middle. This is a doji candle. So top left corner, neutral candlestick patterns, doji. It looks like a cross. It's just a little T. There's no like big body on it. It's neutral. Big green candle on the right. So right over here, see where it says morning star, morning doji star right here? Big red candle on the left, neutral to bullish in the middle, big green candle on the right. Combine these three things right here on this picture and put it on your freaking chart. When you see it, that is a sign for a potential big reversal coming in. So that is my absolute favorite of all time. Previous day had it as well. Took calls. This is what completed the $2,000 account challenge. Big red candle on the right. Doji candle, long bottom wick, closed neutral, but neutral to bullish, which is good. And then a big green candle came in right afterwards. It closed back above a level that I had. It also closed back above the EMAs and VWAP right before that candlestick closed by a few cents. And I instantly got a nice pop to the upside. And then what happened with SPY for the rest of the day since that morning star appeared? It trended and held all damn day. It even kept going overnight. It went higher and higher. I sold those calls right up here just before it went to 611. And SPY went from 609 to 616.40 off of that freaking Morningstar reversal low. Multiple 100% trade. It was absolutely freaking amazing. So would you take calls after the big green candle closes? Yes. Sometimes I do front run that candle, but most of the time, right when that candlestick closes, I'm in. So if you look at, because people, if you're on the live stream the other day, right, when I took these calls, the second that 9:55 right here candle closed at 10 a.m., I hit the send button to freaking place that order for those calls. And the next candle instantly wicked up and went upside, and I got like 12%, like almost instantaneous. People are like, dude, I couldn't even get filled. That was so quick. I was like, right when that candlestick closed Morningstar, I bought the calls. It ended up pulling back down, retested it. It came straight back to entry. It sat there for a minute, and then 5 minutes go by, pushes back up, comes back down, and then ends up getting, the bigger move here up to the upside. And then I sold the calls, the rest of them right up here after this big candle came in. So yes, 99.9% of the time, I will wait to see when that candlestick closes, because think about this for a second. So the Rivian calls that I'm in for a swing, that was a front run because I entered into those on Wednesday, I believe, and the weekly candle didn't close until yesterday for Friday. So I bought the calls based off of it retesting the weekly 21 EMA of support. And if it closed above $14 on Friday, that green candle would have closed bullish in the previous two candles. If you combine them all together on the weekly, it would form a morning star. So that was a front run. And yesterday, it did not close above 14. So I did front run that swing trade by 3 days and paying the price of being in a red trade. So that happens when you front run. So again, 99% of the time, wait for that candlestick to close to confirm and give you the 100% validation of that candlestick pattern right there being present on your screen. All right. 5 minute time frame, the lowest used for taking trades? Yes. That is the lowest. All right, those three that we just covered, we are quickly going to discuss their evil twins. All right, so we had the hammer candle, all right, at the top or at the bottom of a downtrend. Now you flip that upside down and make it red, because now we want to be bears. You're going to look for a shooting star, all right, at the top of an uptrend. So by that, let's go over to SPY. Let's go find a day where SPY is ripping to the upside. And there's a hanging man right there, so that one's nice. Perfect. We're going to use this one right here. This was a great start to the day. So SPY opens up and gets a nice push. SPY opens up at 9:30 and gets a nice push here to the upside, okay? You see the wicks on these candles? What does that mean? what I say what happens with long wicks, what does that mean? If you see wicks on the bottom, that means buyers are present. You see wicks on the top, that means sellers are present. Since we want to be bears and we're looking for shooting stars, this is good because you have a long upper wick right here on the top of that candle. It pushes back down. You get a small red body right there. So it is an upside down green hammer candle and it's red. So again, evil twin brother, that makes it bearish. So you see that at the top of an uptrend or at the top of the pop, high of day, whatever it is, reversal, come back to the downside, right? That's all a shooting star is. That is sellers present and pushing the price action back down because they want to keep it from going up any higher. Now, let's just go look, and there's the good brother. Here's the little green hammer at the bottom, right? Big reversal to the upside. So now let's find another big trend update. There's hanging mans on these other two, which that's the next one that we're going to talk about. It's like the inverted hammer. Here's another one. This is a good one too. See this green pop right here? So SPY started to get a nice trend to the upside, and then it stalled out and consolidated up here for quite some time and didn't go anywhere. And then this green candle came in, boom. But then SPY put this red shooting star right there. It tried to push back up and go back to high of day. It tried. But what happened? A red candle came in and it put in a lower high. Right? So the way I take this trade is short the shooting star near high of day. That's my risk. What's my reward that I'm looking for? Previous price action downside, which shows low of day is all the way down to here. So that is going to be like full target for this trade, right? And then look how this plays out. Red shooting star at the top of this uptrend, risking high of day, and it gets a flush all the way back down. This risk reward's almost 6. So the biggest move of the day was this huge downside move right here as the biggest move of the day. And if you would have risked, the high of day right here, if it starts to push back above there, it invalidates it because obviously bulls are still strong, but we're near the highs. You can get a red shooting star, also a lower high, which is bearish. And you catch a plus $600 trade, risking only losing $100 potentially. That is what you want to see. And if you go to SPY 15-minute chart, again, any time frame, any stock, doesn't freaking matter. So let's find higher time frame, shooting star at the top of a green uptrend that catches a reversal to the downside. Here's a little one, but it's almost, that's something called a gravestone doji, which we're not going to get into. All right. Here's two. Here's actually a few good ones right here. SPY ripping to the upside. Makes a new high of day on the 15-minute chart. But it gets pushed back down by the sellers. And when that 15-minute candle closes, what does it close as? Long upper wick, small red body at the high of day. Making it just made a new high of day and gets pushed back down. That is called a shooting star. Same exact thing. Short, risking closing above the highs, and we want to target previous low of day. But this thing went well below that, right? And this is on the 15-minute chart. Go over here, very similar. Look, they pop SPY up. This is back and forth price action. This is how you scalp. Red shooting star right there. What happens? Next candle, red comes down. Look at that. Green hammer candle comes in. What do you want to do? Exit shorts, go long. Get the pop back to the upside. Okay? See where that shooting star is? If you mark that, look what came in again at the same spot. Another red shooting star right there at high of day. What happens? It comes back to the downside. Then what does SPY do? Pushes back to the upside again after that. That's kind of how you scalp. Look, and then you draw a trend line from all of those lows. This is how you trade both directions of price action. Puts, calls, long, shorts. Look at that. You could have traded downside here, green hammer candle, exit shorts, go long, get a push back up to high of day, gets another shooting star, exit the longs or the calls, go short again, take it back down, hit the trend line, close, it gets a pop back to the upside. That's how you can freaking scalp. But this is on the 15-minute chart. So this is really nice price action right here of both upside and downside with these red shooting stars. All right, so now, last but certainly not least, is the best bearish candlestick pattern of all time. It is something called an evening star. So this little guy right over here, okay? Evening star is the absolute best 9 times out of 10. Same with the morning star. I'm going to smack this thing. You want to see an evening star at the top of an uptrend. So this was a trade that I talked about the other day. Oh, look, it's already on the chart. So we just learned about a shooting star, which is that guy right there. That is a shooting star right there in the middle. SPY gets nice green movement candle to the upside. Boom. Small red body, upper wick. That is a shooting star candle right there on the 5-minute. 9 times out of 10, you want that next candle to be red. Boom. Right there. It is red. Now, if you took puts on the shooting star, you're already in. But now, you combine those 3 candlesticks together. Now you get something called an evening star. Now you got the double whammy, right? You had a shooting star that turned into an evening star. You can bet your ass a nice freaking reversal's coming in. What happens? Yeah, that was high of day, and it just continued to sell off and just go lower throughout the entire day after that. That is what you want to see. That is absolutely perfect. You can't ask for anything better. That's the trade you want to see. And low of day is right down here from this morning. Mark that, and eventually right here it hits full target low of day perfectly right there. Look at that. That is an evening star reversal. I will hit that again 9 out of 10 times. That is the best bearish sign you could possibly ask for. And again, 5-minute, 10-minute, 15-minute, 1 hour, 4 hour daily, it doesn't matter. Again, you look for these things on any stock, on any freaking time frame. So now when you combine all of these candlestick patterns together, you get something called chart patterns. Chart patterns are nothing more than a bunch of candlesticks combined into a chart pattern. So when you combine the candlesticks, you will get things like this, where these lines are, but these lines are going to be candles. So again, there's a bajillion different of these chart patterns. We are not going to sit here and talk about all of them. I'm going to go over the ones that I look for every single day, again, that have the highest success rate and the biggest reward. So the 6 I'm going to cover are something called a double top, a double bottom, a head and shoulders, an inverse head and shoulders, a bull flag, and a bear flag. Everything else after that is almost nothing more than just drawing trend lines, which we will also talk about during this time right here too. So the first 2 we're going to talk about are a double top and a double bottom. It's nothing more than when price action hits the same spot twice and gets big reactions off of it. And that's all we're looking for, are big reactions with these things. Big reactions mean that volume and money is coming in this area, which means you can catch a good move in the market. And that's what we're trying to do. So for a bearish double top, right, it's going to hit the same price point twice and reject. When it does, it creates the letter M, like Mike. Okay, so now what we're going to do is we're going to scroll through SPY real quick, and we are going to try to find the letter M on the chart. You want to see SPY reject the same price point twice and create the letter M. Like this. Price action comes up, it comes back down, comes back up, comes back down. That's what you want to see for the letter M. And then you want to see a sell-off at some point in time. So, mark that. Let's get rid of this real quick. So, SPY came up here, hit this level, and got a nice little pullback, okay? So, if SPY comes up and hits this area again and rejects it still, okay, that's called a double top. It hit the same price point twice and it does not want to get over top of it. So, when it rejects and it comes back down, what letter does it create here on the chart? The letter M, like Mike. What you want to see is now SPY to continue to stay underneath that level where it double topped. That would be my risk, right? And you want to see it sell off and go lower. Obviously, that is what happens here with SPY. It does sell off and go lower. It never breaks back above that price point. So if you're in the premium Discord, you know one of my things with how I trade, people are like, hey, when you cut things for losses, you're taking profit, right? Are you taking profit at plus 15%? Are you taking your losses at minus 15%? Like, most of the time, the answer, yeah, that's about right. But usually what it comes down to is the technical analysis on the chart. Why did I get into this trade? I got into this trade for a double top, which means if I take puts on SPY up here, right, based off this double top right here, rejects the price point, SPY takes forever to drop down, right? Because it kind of bounces back up and then it still stays underneath, but it just consolidates right inside here before the big flush or downside. So what does that mean for those put options, right? Most likely those put options are going to be red because of something called theta, which we're not going to talk about, but it's just where your contracts decay and lose value because the trade's taking too long to play out. But does that mean the trade's wrong? No. It's just taking too long to play out. So my risk is above the yellow line. If it closes above it, my technical analysis, my reasoning for getting into this trade is invalidated, which means I cut it for a loss. I don't care if that loss is minus 5%. I don't care if that loss is minus 25%. I don't care if it's minus 16, 12. I do not care, okay? Well, okay, I do care because I want to keep that loss very small. But the reason behind the trade is based on what the chart is telling me. I trade based off the chart, not how much my contracts are increasing in value at the time. Yes, that can play a fact. If I'm up 50%, I should be taking profits on positions. But I have targets for downside of where I'm targeting. So when it hits my target, if it's up 20%, I take a trim. If it hits that target and it's up 50%, I'm taking a trim. Do I care if it's 20% or 50%? No, not really. It's hitting my target, which means I should be taking profit, okay? It's all based on chart technical analysis for the reason on why I cut it for a loss or why I'm taking it for a gain. So even though it takes forever to play this thing out to the downside, I would have sat in my puts for this double top until it proved me otherwise. And then patience pays, right? Then it just flushes to the downside. That is beautiful. Now, the opposite side of a double top for the M is something called a double bottom. This is where support hits twice, buyer step in and hold it. When it does that, it creates the letter W for Wombo, right? So, look, there's actually one right here, and that's what SPY does going into the close, and then it rips up, right? It's beautiful. We'll try to find another one, but it's just literally right here on the screen. SPY comes down. SPY comes down. What the shit? Oh, why does it not let me click on it? There we go. SPY comes down, pops back up. Comes back down, pops back up. What letter is that? It's a W for winning on calls. Ba-boom, right? Ripper to the upside. That is what you want to see. SPY makes the letter W because it hits the same price point twice and it holds. So when it holds here and you take the longs down here at some point in time, and we're going to risk if it closes underneath of that. I want to target all these highs back up here. Look at this beauty. Look at this beauty. What happens, right? Creates the W for winning on calls, and it rips to the upside, right? Nothing more than when buyers step in at the exact same price point 2 times in a row, and it creates the letter W on the chart. That is called a double bottom. Letter M, like Casey. W for Wombo. So for your thesis to be invalidated, you want the candle to close above or below the double top or bottom, double top or bottom. That's when you exit your calls or puts. Correct. So I'm taking it based off of the double bottom, this W. So as long as it holds this W, right? As long as it holds that W and it plays out and it holds that bottom line which created it, that is my stop loss. If price action pulls back down and it closes underneath that line right there where it double bottomed and bounced twice and I'm in calls, I'm selling it for a loss, right? I'm at, because it's invalidated. We're making new low of day. It broke that price point. It is no longer a freaking W that is going to be playing out to the upside. There's no reason for me to sit in these calls and be in this trade. I cut it for a loss. Minus 5%, 10%, 15, doesn't matter, right? I cut it for a loss. The chart setup got invalidated. It didn't work out. Move on to the next, right? And then vice versa for the upside, for the double top. Same thing. It went the next day. How far are you buying calls to maximize? I don't trade 0 DTEs and I rarely trade weeklies. So for this one to be a swing trade, it's most likely going to be 1 to 2 week out contracts. So this one was June 25th. I probably would have taken July 11th contracts. That would have given me about 2 weeks of time. After that swing and that move, these contracts probably would have been up, if I had to take a guess, 40%. Probably about 40% at the open candle on the pop, and then they probably ran to 75% near the high up here for a nice little swing, and then pulled back down, and then eventually came all the way back to, oh look, it hit the level again. Oh, look at that. This is how support and resistance works, which is the best part of this entire mastermind. It hit that same spot again, and then it just went back up higher. Beautiful. All right. After the Wombo and the Casey for double top and double bottom, we're going to talk about 2 other ones, head and shoulders and inverse head and shoulders. And it's exactly what you think, because that's in the name. Head and shoulders. It looks like a head with 2 shoulders, a shoulder on the left and shoulder on the right. I see one right here on the same chart. This is beautiful. So, head and shoulders is where's head and shoulders? Head and shoulders, price action pops back up here, pulls back down. Price action goes a little bit higher, pulls back down. Price action pops back up, comes back down. Okay, that is called a head and shoulders. All right, this one's very tiny. Let me drop it down to the 3-minute. It might make it a little bit more clear. I'll try to find one on a larger time frame. Oh shit, what day did I take? What day was that trade on? Oh shit, oh there's a, oh that's kind of like a little W. That was nice. I know it was right before market close. It's not this one. I don't think it's this one. Oh, it's here. Here we go. There we go. There's my head and shoulders right there. This is my head and shoulders. It's slanted because price action is actually, volume's probably going lower, which is good. You have a shoulder here, which is this top, and then it pulls back down. SPY makes briefly a new high of day right here. Comes back down. And then pops back up right here. So this is a head and shoulders. The cool thing about this one, the 5-minute, is that right over here, this rejection, that's where the shooting star is that we talked about on the 5-minute. So you have this little rounded top right here, you have your head right here, and then you have your other little rounded shoulder right here. That is called a head and shoulders, which is something you want to see at the top of an uptrend, because we're buying puts near the highs. That's how you maximize your reward and lower your risk. So short position here for the shoulder, risk high of day. We got previous price actions today, shows it all the way down to here. That can be my full target, right? Beautiful freaking chart right here. Let's stop looking at SPY and go look at Amazon. Because I need to show that this shit works on, it doesn't matter. It doesn't matter the stock, doesn't matter the time frame, yada, yada, yada. Amazon, what a freaking ripper on Friday. Google with a huge ripper. Here's an M. Right here, double top. Look at this M. We just talked about it. Casey, right? Look at that, sell off. Boom. Hit the same price point twice, rejected. Creates the M, sells all the way down to the low of day. Beautiful, right? Look, here's a W. Here's a Wombo. Look, comes back down, pops back up, comes back down, rips back up. Slow grind higher. It held the same price point exactly twice and created the Wombo right there. Nice little W on the chart. I'm taking calls here, risking right underneath of it. Look at the green candles. Boom, boom, boom. Three green candles right in before the next red one. Beautiful. I want to find a clean head and shoulders on SPY. But when's the last time SPY had a clean 5-minute head and shoulders, right? There's an M. You guys should be able to see this like right in front of your face the second it pops up. Look, M, Casey. Boom. I'm going to start saying that now. Look at that. Hit the same price point twice. Rejected it. Letter M. Sells off. Easy day. Easy freaking day. SPY, do you have, or Amazon, sorry, do you have any head and shoulders on here? When's the last time you had? There's probably a big head and shoulders right inside here. That's actually a pretty good head and shoulders. I'm not going to lie. That's a good one on a larger time frame. But it just goes into the close and then doesn't get a chance to play out. Here's one. That's a decent one. There's actually... No, that's not one. But here's one right here. This is a head and shoulders. This is a perfect head and shoulders, and I love the way it plays out. So this is great. All right, so this is what you want to see. You want to see that pop here. You want to see that new high briefly. And you want to see the pull back down, and then you want to see right there, right? That's what you want to see, right? You want to see this head and shoulders right here. The cool thing, there's multiple ways to trade this. When you have a head and shoulders, you have something called a neckline. You see right up here at the top, you see this head and shoulders that it draws and then the arrow coming down. You see the blue line that runs across the middle? That's called the neckline. It's your neck that runs right across the middle of your head and shoulders. It's your support that you want to break. So if we have a head and shoulders right here on Amazon, right, that's what we want to break, is this support. Look what happens on Amazon when this support right here for the neckline gets broken by that red candle that closes underneath of it, right? What instantly happens to Amazon when that plays out? Dump straight back down. So this head and shoulders, I'm going to teach you 3 different ways to trade this. This one only gives you opportunity number 1 and 2, because the retest doesn't happen until later on, and price action has been out for a minute. Depending on how this candle forms. So there's multiple ways to trade a head and shoulders and inverse head and shoulders. Number 1, identify the shoulders, okay? But mainly the left shoulder, the first one that is created. So you'll see the little rounded top right here for the left shoulder that was created. This is where the resistance is for the shoulder. And then you have your high of day, which is right here. You have your neckline, which is, we're going to make the white line. Cool. You can front run a head and shoulders, which means when it makes the left shoulder, right, and then it creates your head right here in the middle. When the head and shoulders bounces and comes back up to where the left shoulder rejected, this is where you take puts. This is a front run entry. This is what I do majority of the time because it lowers my risk, right? Instead of waiting for the rejection and it to come down here to create the right shoulder, I'm going to front run it and I'm going to short the pop on it. So when it pops up to that area where the left shoulder rejected, I'm going to take my puts right up here. That is entry and option kind of number one. Number two is the neckline break, which means it comes back down, create your head and shoulders. You're like, cool. When it breaks that support, I'm in it, baby. Let's ride, right? That is put entry number two. Is, oh, whoopsie. How'd that happen? Put entry number two, right there. When this support gets taken out and they break it, that's number two. Number three is the retest. So usually what you'll see, this example, they knifed it and it didn't give number three. It's a break and retest. So it breaks the support, it comes back down. When it pops back up and rejects where the neckline is, you take put entry number three, and then you want it to then sell off and make that next low. That would be put entry number three. For this setup, it doesn't get it. The retest doesn't happen until like 2 hours later or whatever, all the way over here. That's not what you want to see. So unfortunately, it doesn't give that entry. But these are two ways to go ahead and trade the head and shoulders. Again, you front run that right shoulder for the rejection, which is what I like to do. Or when it breaks the neckline support, you get the puts for that downfall is what you want to see. If it wicks, it's not invalidated, only closes, yes. I like candle closes above and below those areas of support and resistance. Wicks can get a little scary. I try to be as patient as possible. It depends on the size of the candle and wick. Like if for whatever reason I was in calls right here and this giant red candle came in and was a long bottom wick down here and it keeps on freaking going, and it's a 5-minute candle, and after 2 minutes in the candle this thing is all the way down there, I don't think I want to hold those calls for another 3 minutes until that candle closes, right? So most of the time I will close. It depends on if there's volatility or whatever it is. But that's on rare occasions, right? You don't really see these huge big candles and long wicks and big stuff like multiple times throughout the day. You usually get normal price action. So yes, normal candle closes above and below is when I will exit positions. The opposite of a head and shoulders is something called an inverse head and shoulders. Let's use Amazon here on the exact same. Here's a kind of little head and shoulders right here, and then it plays out a little bit to the downside. Let's see if we can find an inverse head and shoulders on Amazon 5-minute chart. Let's see what we can do. Here's another little head and shoulders right there. A lot of back and forth price action on Amazon. There's a huge gap up right here. That's insane. Look, double top, M, flush. For, Casey. All right. Here's an inverse head and shoulders that gets invalidated and it goes, well, that's because it goes into the close. So that sucks. Here's a head and shoulders right here. Here's a big head and shoulders. Just talked about. See this pop right here? The next pop makes new highs. Pulls back down, holds support, pops back up right here. You see where the left shoulder is? Over here? Mark that level. I shit you not. Look where the right shoulder rejects. Casey front runs the puts. And then sell off downside. That turns also into a little swing overnight. So that would have been weird to trade. I want to see an inverse head and shoulders. Somebody has to have created one recently. There's another head and shoulders right there, and it makes a new low of day after that. Nobody has an inverse head and shoulders. Are you shitting me? Here's a W. That's a beautiful W right there. Oh my goodness. Here's another head and shoulders. That one plays out too. Goes overnight. Alright, well, I can't find a freaking inverse head. There's another W. I'm finding every other chart pattern except for an inverse. Is that one right there? No, I wouldn't play that. If I'm not going to trade it, I'm not going to teach it. Amazon, you suck for inverse head and shoulders. Is that one? This... Alright, this one's iffy, but I probably would have taken this one just because of the way that is. So, and it's not the cleanest. Where is it at? Head and shoulders. So you see this low? See the Morningstar reversal that it actually creates? See the new low of day right here? Pops back up, pulls back down, pops back up again. All right, so this right here, this would have been my inverse kind of head and shoulders. It's very close together, but I like it. So you got that low right there. There's a Morningstar inside that bad boy 9 times out of 10. Next candle's what? Big green! Look at that. And a big green candle comes in right after it. That would have been fun. All right. Briefly, whoopsies. Wrong shape. Briefly makes a new low of day. Okay. Briefly makes a new low of day. Here for the head. Pops back up, pulls back down, and consolidates. Right here. All right. Very close together. Inverse head and shoulders. Mark that shoulder. Front run the entry. Look what it holds. All these 5-minute candles all close above that shoulder. Your neckline resistance. Ooh, this one does all three. This is a good one. All right, so this is beautiful. All right, so entry number 1 is here. So this is call entry 1. Front run, the right shoulder hold. Number 2, wait for a candle to break and close above the neckline support for getting the breakout. This is call entry 2. Number 3, after it breaks up, when it does the retest right here. See that red candle, that wick that came straight back down, and then they pushed it back up, and they closed it back above. It retested, showed that the buyers were present, pushed back higher, keeping the inverse head and shoulders valid, giving you a potential entry here. So you have the front run entry, you have the breakout entry, you have the breakout retest confirmation entry. You have 3 different entries here for this inverse head and shoulders. Lo and behold, who's in for the ride? All right, look at that. Beautiful, beautiful move to the upside. That's a great chart. That is a nice inverse head and shoulders, consolidated very close. Consolidation leads to expansion. That's how you catch squeezes. The chart showed an inverse head and shoulders chart pattern right there. And you catch a huge reversal here on Amazon intraday. That's a beautiful, beautiful chart. When you say close above a certain level, does that entire candle body need to be above the level? Yes. So, not the entire candle body, the candle close. So, see how we marked this level as 195.61 for the neckline? This candle here the top of the body, which is right here, where the body, and then you have the wick right there, that is where the candle closed at. And if you hover over top of the candle, if you look at the top of the screen right up here, it says C, right? It says O. If you guys don't know this, it says OHLC in white letters. That is the candle open, candle high, candle low, and candle close for whatever candle you're hovering over top of. See how the numbers change at the top of the screen depending on what candlestick I'm looking at? This one says that it closed at 195.68. Our level is 195.61, which means that candle closed 7 cents over top of what we needed. That's why that is called entry 2 for the breakout. Where would you exit on the last example? At areas of potential resistances at the highs. So for this chart, I mean, you got to just do your own due diligence. You got to see that there are sellers present all right here from the previous day, which we're getting ahead of for support and resistance. But you see all these rejections on Amazon? That means sellers are present right here. Drag that over. Wow, would you look at that? Is it a coincidence? That's where Amazon rejected and then sold back off? No. Look, isn't that crazy just how support and resistance works? That's where you exit. Listen to the chart. Don't look at you being up 50 bucks. Don't look at you being up 10%. Don't look at any of that shit. It doesn't matter. Where the freak is the text? How did I miss it? There it is. Text. Exit. You exit calls at resistances. This is previous day high. This is previous day high. This is resistance. You draw that box, send it over here. Look where Amazon went. That is how you trade. It is beautiful. Look at this. All right. This is how you trade. I'm going to screenshot this and I'll put it there in the chat. There's a beautiful chart. That's how you know where to enter and that's how you know where to exit. The chart tells you where to take entries and where to take exits. All you have to do is the homework. You have to know where the support and resistance is at. Where are the buyers present? Where are the sellers present? If I'm in calls and I know sellers are present on Amazon in this area right here, at this area of 198.60, when we get up to that area and I'm in calls, I should be taking some freaking profit because I know sellers are here because they keep slapping Amazon every time it gets up here. Every time Amazon entered into that zone over here, they slam that shit straight back down every single time. So if I'm in calls, I should exit up there. And look what happens. They slammed it back down. Guess who sold Amazon near the highs for 100%? We did, right? We did the homework. We knew where to take calls and where to take the exits. Why would you choose the previous day high instead of the other formation before that has highs? I do. We just haven't got to that part yet, Michelle. For the examples here, I'm just targeting the biggest levels that's on the chart without going further into depth. When we talk about supply and demand, support and resistance, we're going to have multiple areas where we would trim, right? So if you guys notice, I take trims during my trades. It's not like I take calls here and then I'm just going to hold it and close at this target right here. No, I'm taking trims, at specific areas between all of that until we get up here. Like this would be target 1, right? This would be target 2. This would be final target number 3, right? There's going to be reasons behind the trims, right? I just haven't gone over that yet because we're not at that point of learning about the big areas of support, resistance, supply, and demand. Sorry, I'm drinking some sweet tea right now. All right, double bottom, double top, head and shoulders, inverse head and shoulders, bull flag, and bear flag. Two easiest ones to absolutely find, or to identify, I guess, is the look beautiful M. Casey. All right, let's see what we can find here. All right. I don't really like that one because it takes way too long. So bull flags and bear flags are nothing more than a consolidation period before the move higher. So let's see right here. This is a decent one. You see Amazon gets this big move right up here. You see it go nowhere for like the longest time. You see it just stay flat like right inside here. All right, this is something called a bull flag. It's just area of consolidation. I said it before. Consolidation leads to expansion. Similar to head and shoulders, there's multiple entries for this. So the reason why it's called a bull flag and a bear flag is because it looks like a flag pole, right? You have your big move. We're bullish, bull flag. Okay, we have a big move to the upside. That's the flag pole. That's the big rip. And then we consolidate sideways. That's the flag that is hanging off your flag pole. So during this area of consolidation, I want to be looking to take calls, right? You get the breakout. That's call entry number 2. Because technically call entry number 1 is when you're consolidating and holding inside this flag. Now, if it completely breaks down out of this consolidation, do we still have the flag right here? No, because your flags don't look like this. If it breaks down there and you drew the trend line, your flag wouldn't look like that. It's not what you want to see. It is just sideways consolidation right here, right? If it breaks up, pulls back down, and does the retest, we'll see if we can actually find one. That would be call entry number 3. But this is a bull flag breakout, and then you want to see it rip to a new high of day, right? That is a bull flag. There's a nice little head and shoulders right here. I'm not sure if we talked about this one. Head, or sorry, left shoulder. Head. Right shoulder. Mark where the left shoulder was at. Boom! To the freaking penny. Front run that entry, boom. It turned into a swing. It actually tested it again right before close, sold off even lower, so that was nice. And then swing overnight, it opened up lower and then ripped. Let's see what we can find. All right. Evil twin brother. Bear flag. Where's my trend line? There we go. Big move down. Flagpole. Bear flag. We're bearish. Consolidation. It honestly, this got dicey. Right there. That got dicey for a second. That green candle looks like it's about to break out of the freaking bear flag. Gets a red matching candle right next to it. That was close. Right? Alright, so this one gives you all 3 entries. So at some point in time during this flag, this consolidation period, be looking for puts. Get the big move down, you're just consolidating sideways, you're waiting to see if it's going to invalidate and rip back up to high of day or if we're going to sell off and make new lows, right? Put entry number 2 is right here, where it closes under the bear flag. Put entry number 3 is on a break and retest. It gets a green candle after that and gets a little shooting star candle, which turns into a what? What is that called? What is this candlestick right there formation called? After it breaks the bear flag, what candlestick pattern comes in play? Evening star, baby. I know that's right. I know that's right. Evening star. So it breaks the bear flag, it gives you a retest, and it gets slapped straight back down. That's put entry number 3. This is what I like to trade. on these. It's my favorite. And it also leads to an evening star. And evening stars print the what? Biggest returns to the downside. And look what happens to Amazon after that evening star comes into play, right? I like the break and the retest entries because it lowers your risk. Because if I'm short based off the retest, if it enters back into the bear flag consolidation, I'm out. I'm not taking the trade because it created the bear flag and it broke down, which is good. But then if it accepts back into it, you no longer have a bear flag anymore because it already broke it. It can't accept back into the bear flag and then come back down again. You're not going to have a bear flag because this price action right here broke the bear flag already. So if I enter in on the retest here, if it goes back into the bear flag, it invalidates it. So I'm going to be out of the trade. And then you get a nice move here to the downside based off of the evening star right there. That is a beautiful bear flag right there. Breakdown, retest, rejection, comes lower, creates an evening star. You flush that bad boy, start making new lows. Easy day on Amazon puts. So those are the 6. Double top, double bottom, head and shoulders, inverse head and shoulders, bull flag, bear flag. Everything else on here is nothing but wedges and a bunch of blah, blah, blahs because it's nothing but trend lines. You do need to understand trend lines. So by trend lines, what do I mean? It's just for downside, it's lower highs and lower lows. So you see like this high right here on Amazon. Right there, that's a high. Amazon comes down, it pops back up, creates a lower high. That's a rejection, it comes back down. Once it breaks that trend line, which is right here, and closes above it, that's bullish. It is no longer making lower highs. It broke above the trend line and closed above it. What does that mean? Downside trend is invalidated. Look for upside trend, right? So now it starts pulling back, going higher, pulling back, going higher. Now you flip it. Draw the trend line on these lows, right? And then trade that direction that way, right? It's never going to line up always perfect. This one actually, the downside did line up pretty freaking perfect there for a second. It's nothing more than just trend lines. It's like right here. This is lower lows and lower highs all day long. That creates trend. Like right here. See this low, and you see that one right there. You see how they big reaction. Big reaction. Buyers are present, right? Draw the trend line. It breaks and closes underneath right here until it reclaims the trend line or goes above that high. That's up here, right? I create that in white. What does this mean? This is a break of trend, which means I should be looking for puts and potential downside all in this area because we broke the uptrend. So now I want to see it stay underneath this area and I want to see it flush lower. Lo and behold, what it happens, it's an overnight thing. It actually does it into the close right here and then sells off overnight and then back up in the freaking morning. But it opened up huge red. That's all other chart patterns are. It's nothing more than drawing trend lines on higher highs, higher lows, or lower highs and lower lows. Which I love trend patterns. I think they're in trend lines. I think they're absolutely fantastic. All right. That's enough on all the basic stuff. That is nothing more than candlesticks and chart patterns. There's nothing we've done on this chart except look at candlesticks and find morning stars, evening stars, hammer candles, bull flags, bear flags, blah, 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 and take trades off of that. This is where things start coming together. We start pinpointing entries. We start finding key areas where we would take profit, exit trades, or exit them for loss or gain. we're going to start talking about the support and resistance part of this whole thing, okay? So support and resistance. This is the biggest part of this entire mastermind. So for the next hour, I'm probably going to hammer this into your freaking heads, all right? Let's see. Finally got a chance to educate from OG. Been missing the session for a long time. What's up? Appreciate you. It is always recorded, yeah, and you can always watch it at any point in time, refresh your memory. I appreciate it. And then when I teach this mastermind next month or whatever it is to a new group of people, you can always come back in here and hang out again. I see Liv is in here. I think Liv has been present for every single mastermind that I've ever hosted. So I appreciate you. So this is where everything starts to come together, because we're going to learn about one topic and roll that information into the next, and then it adds up. And then we're going to take information from topic 1 and 2, apply it to number 3, and it's all going to add up and come together. This is how we end up with a full chart setup and strategies, adding all these additional things of confluence. We're not taking trades, based off just one little thing, right? You got to have a variety of things telling you that bulls or bears are present in this area, and if the trade is good, risk to reward to take. So this is the biggest portion of I think just all the information, and the best part about learning how to trade is learning about support, resistance, supply, and demand. So support is where you look for the stock to hold above or bounce at. This is where a call entry would take place. Do you remember the Wombo, the W that we're talking about, right? The double bottom. You're going to take calls at the low, right? You take calls at the low because it makes your risk very little and your reward 10 times freaking greater, right? Creates that W. You want to see the move higher. So if I'm taking calls off a double bottom support, if it breaks right underneath of that, I'm out. If it ribs higher, right, take the calls when it bounces there, put a stop if it breaks underneath of it. I'm going to target this high right up there. Boom. Small red box and a bigger green box. That's how I know my reward is so much greater than my risk. We're taking calls at the low. You do not take calls near the highs up here unless it gives you a break and retest. What's a break and retest? It breaks above the level, it retests it, and it holds, and then it goes higher. Do you see? Whoopsies. I didn't know I had that many pinpoints right there. That is a break and retest. That's the only time you look for going long or getting calls at the highs, is when it breaks above, it closes, pulls back, and it retests, and it confirms that it's doing something called an SR flip. Support being flipped into resistance, or vice versa. Resistance just got flipped into support. Okay? So support is where your call entry takes place for your best risk reward. If that support is broken, look at that. Look for it to flip to resistance. This is where a put entry can take place, right? This is called SR flips. The opposite of resistance, these are where the bears are at. This is where they look for the stock to stay below and reject at. This is the double top, the M, right, from Mike, or like Crypto said, the Casey, right? This is where the put entry would take place for best risk to reward. If that resistance is broken, right, you look for it to break out, do the retest, make it support, you can flip it and go long. Until that happens, it is resistance, and you should think shorts, puts every single time. That's where people get messed up in the mind when they're trading, is they see this big resistance right up here, right? And this is where people fuck up, okay? And I'll be honest with you, this is where people fuck up. This is clear resistance right here on Amazon, which means if this is resistance, this equals puts until further freaking notice. Every time Amazon hits this area and rejects, it is puts, which means when it rips up here, if you're not long, you missed it. I'm sorry. Don't chase it up here at the highs, because there's people like me who are going to freaking start to sell this thing right up here, and look at the rejections that come in. Red candle, boom, bounces back up. Red candle, boom, comes back down. Now, this one is not a full reversal. Amazon is still very strong right here, But you think I'm buying calls right up here? No, it's resistance until proven otherwise. When does it prove otherwise? Right there. That green candle that breaks above and closes above the resistance. What does it do? The resistance is broken. Look for the retest to make it support, and this is where the call entry, this is where a new call entry can take place. When it breaks above, when it pulls back, and it holds it right here. See how it's holding above? Now you can try calls because this is support now. That is SR flip. And then what happens? Bing bong, you get your move higher right here. That's how support and resistance works. Until that resistance is broken and it closes above, I am not chasing calls. It is freaking puts and shorts every single time. Because, think about this for a second, okay? If you took calls at the high, what's your stop? Think about that right now. Everyone in here right now. If you took calls on Amazon, you missed it. You missed this large move right here. You're like, damn, Amazon's strong, right? You want to take calls up here. You're like, I'm taking Amazon calls right here. What's your stop? Please don't tell me it's low of day. Because if you go long Amazon right here and you're longing it into resistance, what's your stop? Low of day? Holy shit. Your risk to reward is almost negative like 3 right here, which means you're going to risk making $100 to potentially lose 300. What's your stop? If you're buying calls at the high, what's your stop loss? Previous price action low? You want to risk it coming all the way down to here to stay valid? Yeah, you're going to take a drawdown of like minus 70% or something, right? So you flip it. You look to go short first. You short the resistance, stop loss right above it, and you want to target these lows until proven otherwise. Look, pulls back down, I'm green. Pops back up, I'm red. Pulls back down, I'm green. And it stops me out of this trade right here. Boom. Very small loss, right? I don't take the calls first at resistance. You try the puts. Risk to reward says puts first until the chart tells you otherwise. That is what a lot of people are not taking into consideration. When choosing support resistance, do you use candle wicks or candle closes? Both, in a nutshell. I use both. What I'm gonna, because that's part of the session near the end, but I use both. What I look for are the common area or level to be getting the big reaction from. That might be a wick on one candle. It might be a candle body on another one. What I'm looking for is repetition at that price point. So if SPY or Amazon here, if the resistance is 189.44, I'm not really looking at a candle wick or candle body, right? I'm looking at the entire chart as a whole, like this area of support and or resistance, right? So I'm not going to limit myself to just the wick or the candle close specifically. I'm going to look at everything in general just right here at this zone. And that's kind of how I mark my levels. I'm looking for common areas where you see big reactions. So for example, you see how this is a big reaction right here? Because look at the freaking downfall that it had right there. I would mark that. Do you see how this wick up here is all the way up here, but it also caught the big move down, right? So it's just like this area in general, right? It's just that area in general right here. So, and then you just kind of find a common ground. So for me, I marked that level. I marked that level because look, and this is what I mean. Look at the candle body on the first one and look at the wick on the second one. They're the exact same spot. Look where the body is on that one. Even though the wick is all the way up at the top, look where the body is. And then look where the wick is right here. they line up at the same price point, right? Look right here, over here on the far left. You see how all these bottom wicks came in right here? That's buyers pushing Amazon back up. And they closed it above that level until what? A red candle came in and closed underneath of it. And then what happened when that happened? Amazon went to new lows, right? So I'm just looking at the price point where I see common areas of reactions, right? It's a reaction point. So that's what I mean when I'm using candlestick wicks and the bodies. I'm just using the entire chart as a whole to find that price point. I'm looking at what price point area for the support and resistance. So here's a quick thing right here of SPY for support. You see how SPY is holding this level of 434.63? Look, this is how long I've been teaching this class. Look at the price point. SPY is like $180 higher than this right now at all-time highs. When's the last time you guys traded a SPY 435 call or put? It's been a freaking minute, right? So look at this. So SPY hits support right here, and it gets a big reaction. Like I just said, I'm looking for big reactions. That's how I mark areas of support and resistance. It gets a big green candle, move to the upside. Look what happens later on the day. It comes all the way back down, hits the same spot from earlier where SPY got a big reaction and a move to the upside. So what am I doing when SPY comes all the way back down and hits that spot? Do you think I'm going to chase puts right here back at low of day? No, you do not buy puts at low of day near support unless other variables are coming into play, like a head and shoulders, a bear flag, if they're an evening star right in front of that. You got to use multiple things of confluence, right? So first thing I'm going to do at support down here is buy calls. Gets the pop back to the upside. What happens for a third time again near the end of day? It hits the same spot again for you to take calls. A low risk, higher reward trade. It hit the same spot 3 times that day. You could have traded the same SPY contracts 3 times and gone green on all 3 trades and off the exact same technical analysis. Every time it comes down to support where buyers are stepping in and pushing the price action and getting reactions off of this area, it's calls every single time. I could have done it 3 times in a row, went 3 for 3 just based off that and done nothing else for the rest of the day. Is there a specific way to draw the zone, or as you mentioned, looking at roughly the entire chart and draw roughly? There's not a specific way to draw the zone. We're going to cover that here in just a second for supply and demand zones, and I'll go more into depth. It's just looking at the chart overall and looking at where the buyers or sellers are present in that general area, which will create the zone that you draw. It's like an estimate of your technical analysis, okay, which we're going to cover here in just a second. So this is SPY 5-minute support. So you see how you're going to take these calls right here off the support? All right, this is SPY on the 4-hour chart. Again, everything I'm teaching you works on any name, any time frame, doesn't matter. Same shit, different day. SPY actually goes below 400. Look at this in the 390s. So look at this zone that I drew on SPY. I just did the exact same thing right here. You see how some of the wicks line up with the bodies, and I'm drawing the overall zone area of resistance? Same thing right here. See those little circles that I put? Those are upper wicks, okay? And you see the top wicks over here? It's just this general area right here is an area of resistance, 4-hour resistance. Look at the reactions. Every time SPY hit, and I estimated a level around 416.91, so around 417. Every time SPY hits that level, how does it react? Red freaking candles come shortly after and sell off very hard every single time. So that means every single time SPY goes up into that area, I'm not chasing calls. I am looking for puts until I am proven otherwise. I will hit that trade 9 times out of 10. If the 10th one, they rip it and close it over top of it, it's a loss. And that happens because that's the only way the market can move. It can't keep rejecting the same area forever. Remember that. At some point, it will give and you will lose if you're in that trade. And that's perfectly fine because that's how trading works. You will lose, it will invalidate, it happens. You take it, you move on to the next. But that's how the market works. It has to break this point. SPY was at 417 right here, which means at some point in time, SPY ripped above 417 and went higher, because now we're at 615 or whatever it is, right? So it's going to break, and the bears are going to lose because the bulls will overtake that level or that zone at some point in time and go higher. But until that day happens, it is puts every single freaking time. All right. Now, similar to support and resistance, where I'm just drawing lines on a chart, like the double bottom, right? And then like the inverse head and shoulders, I'm putting these levels of support and resistance on here. You have something called supply and demand. So instead of just specific like price point levels, we're going to draw zones, okay? It is a zone or an area of support and resistance. You don't have to put a specific price point level on it. You just draw a nice little box, which we're going to do here. So this is my favorite thing to do, and what I do on absolutely every chart. Again, every time frame, doesn't matter. You're going to keep it simple, right? Support and resistance, but it is treated like a zone or an area. This is where the big boys come in. This is where the whales come into play. By that, I mean millions of freaking dollars are moving at this point. So every time Amazon comes up to this point right here, a lot of volume gets poured into the downside, bearish flow, puts, whatever it is, big money's coming in, people taking profit on longs. What does that cause? It causes a big move to the downside on Amazon every time it hits this spot. That's where the whales come in. So a supply zone is your resistance. This is where the whales come in to keep that price action from going up any higher. So they drive the price action lower. Remember, us retailers, we're fighting the whales. We're just living in their world. Think about that for a minute. So like when you go to the beach, you go into the ocean, you have fun, you play around at the beach, but that's not where you live, and that's not your environment. That's not your setting, right? That is belong to the whales, the sharks, the bigger people out there. That is their environment. That's where they sit at. You are just a smaller freaking object in their field. That is what trading is, being a retail trader. We are trading against the big boys, the whales that are out there moving bajillions of freaking dollars. All right. So we wait to see when the whales come in at those areas, and when they do, we take trades based off how the market reacts in those areas. So supply zone is your resistance. Demand zone is support. This is where the whales step in and they buy it up to keep the price action from going any lower, okay? Same thing with SR flips. Remember when support is broken to the downside, and when it closes under that support and then they retest it and they reject it, like the bear flag breakdown, the retest that had that evening star that we talked about, that's called an SR flip. This is how the market works. It's SR flips. That's all it is. So you do the same thing with supply and demand zones. When that support is broken, it gets flipped to resistance, or vice versa. When that resistance gets broken and you have to sell your puts for a loss because it's going higher, when they retest that area and they buy it back up and they flip it to support, you look for calls and get long, right? That's the SR flip. Same thing for supply and demand zones. So here on this chart, this is Amazon back in the 120s. Look right here where it says supply zone, right here, okay? See where it says supply zone? You see every time it gets up in this area, they push the price action back down until what? What am I going to say? Is crypto here? Is crypto still here? What am I going to say? What am I about to say? You see this giant green candle in the middle of this chart? You see this, it's the biggest candle on that freaking chart. Do you see that green candle right there? That candle is very important, okay? That is the giant middle finger in the middle of that chart. That is the bulls giving the bears a giant green middle finger, because this was the supply zone, which what is our supply zone? It's our resistance. This was the resistance The bears kept coming in and pushing the price action lower. It comes back up, they reject it, they go back lower. What did the bulls do? Gave them a big middle finger. It is not, he said it's not a goddamn coincidence. It is not a coincidence. This is where this green candle comes in on Amazon. It is not a coincidence at all. People are like, man, why is Amazon ripping right here? There's got to be something crazy going on out here. No, it's a key price point on Amazon. It was a big area of supply. It was resistance that it's been fighting for so long. The bears kept slamming it down until the bull said, we're putting on our big boy pants today and we're going to flow a bunch of freaking money and we're overtaking this thing because we're bullish and the bulls are going to beat the bears today right here. So they send the price action directly through that zone. They rip it to the upside, give the bears the middle finger. They overtook that zone. Now, what'd I just say? When they overtake the resistance, when they pull back for the retest and they flip it to support, you look to go long. That's called an SR flip, right? Resistance gets flipped to support. Same thing for the zones. And this is where it all comes into play and how a market works. Supply, resistance, gets flipped into demand, support. So now we have a new demand zone. That supply zone of resistance just got overtaken by the bulls. It keeps ripping higher. When it keeps ripping higher, wait for the bulls to get exhausted from their rocket ship to the moon, and then for the bears to come back in and push them back down to earth, essentially. When that happens, now you have your new resistance above you, which would be your new supply zone, right? That's your new resistance. When it pulls back down and it retests that area that they overtook, and the bulls are like, all right, we were exhausted for a little bit, you let us rest, and now we got our mojo back up and we're ready to go again. They step back in at the bottom of their zone they overtook and they push the price action back to the upside. They go retest the area where the bears are slamming them in this new area. They slam them back down. See how it's ping-ponging back and forth between it? This is all how the market works. Because like I said earlier, it can't sit at the price point forever. Somebody has to lose. Somebody's going to lose. The bears lost that day on that huge green candle and the bulls won. They broke it out of the zone, so now Amazon, the stock, can now move higher until proven otherwise. Now you have a new zone above you and you have this new zone right here below you. Now you trade the price action both ways. Every time it hits that new demand zone, what do? You get calls. Where are you taking it? To the red zone above where the bears are, your supply zone. And then what are you doing in the supply zone if you're exiting calls for profit? You're going to look to go short. You're going to sell it. And you're going to take it where? Where the bears are taking it, straight back down to the demand zone. And you do that over and over and over and over again until somebody gives the other person the middle freaking finger and breaks one of those zones again. When they break one of those zones again, you rinse and repeat it. You mark the next zone either above or below, whoever wins, bulls or bears, and that is what makes a market. That's all you're doing, and that's all you're following. It is nothing more than support, resistance, supply, and demand zones. Playing ping pong back and forth between the two until somebody says, fuck you, little Johnny, and they give them the middle finger and they overtake that area for themselves and they move the stock. They move the price action. And then that's it. That's literally it. This is the most important freaking part of the entire mastermind is support, resistance, supply, and demand, because this is what makes a market. When you identify these areas, you win both ways. And not only do you win in calls and puts, it tells you where to take your entries and where to take your exits. You're taking entries in the demand zone, you're exiting at the supply zone. You're taking entries on your puts in the supply zone, you're taking your profits at the support in the demand zone, right? That's all it is. So looking at this chart on the day, you would be looking for calls because you're in an area of support demand. Yes. 100 freaking %. Yes. So you're carrying these zones until new areas are created. 100%. Yes. Can you show some examples on common tickers you trade drawing these zones? 100%. Yes. You guys are freaking on it. All right. So that's what we're about to go do right now. Let's go do something. Tesla? Do something random. Let's do Tesla. All right. Look at this. I'm not even going to move the chart. We're just going to do this right here. All right. You see this right here? All right. You see Tesla get this sell-off right here? This is resistance, right? This is a reaction point. It's where Tesla keeps selling off. Now, if I were to put a level there and or draw an area of this resistance, and I drag that resistance over, whoopsies, no, put it in the middle right there, and then right there. I want it to look nice and pretty. And then I were to drag that over, how many times could you have taken Tesla puts that day? At least there. Small retest right here. Definitely there. Here. In here. This is a supply zone, which means I am short Tesla, and look at the level. Look, it's 330 just about, right? I am shorting Tesla every time it hits 330s until I am proven otherwise, because every time Tesla hits this zone up near 330, it does not like it. They do not take it higher and do an SR flip. They're not pushing higher, coming back down, retesting it, and then going higher. That's not what's going on. They are rejecting and pushing it lower, which means every time Tesla hits 330, I get puts. Every single time. That is the supply zone, and that's how that shit works. All right. Now, let's draw this over here. I have no idea what's on the other side of the screen, so let's go see what happens. Oh, shit. What's that? That's a long wick at high of day that went right to my zone. Look at that. He put his big toe right into my pond. Look at that. Just a little bit. Just enough. Just enough for the bear to step on the bull's toe because he dipped it into his freaking pond and slammed that shit straight back down. That is how supply zones work. I'm going to put that in here. Just commenting back to your channel. So it doesn't matter what time of day it rejects, meaning even after hours of pre-market. Well, I mean, oh, you mean like for the level for the zone? No. I was going to say for trading, yeah, because some of these you can't trade after hours. How big does the box have to be? However big you want it to be, Michelle. However big you want it to be. No, so it comes down to, again, you just have to find the area of the common reactions. So, for example, you see this area right here on Tesla? You see how it rejected and then it got this big red candle right afterwards? That means this is an important spot on Tesla, okay? Not only is that an important spot on Tesla, you see right up here how it briefly goes above it and then like pulls back down? You see how like right up here it gets a big ripper upside, starts to pull back down. On the larger time frame, the box doesn't really have a limit. It's just like right here, we'll just use these 2 days of price action. If I were to take, I mean, you can even go right up here. We'll do that. Whoopsies. We're going to mark that low of day. Supply and demand zones are usually used for larger time frames. So mark that. I want to mark that. Bulls live here. That's what I'm going to type in. Bulls are here. Look for calls for big reactions / buys. Why am I putting that here? Because this is a big area of support between 320.45 and 324.66. All right, so now if I take this zone, draw that over here, look. Just kind of how put this in here. So for Tesla, we'll do the upside too. This is very small. Range for Tesla. Bears are here, look for puts, because every time Tesla gets up into this area, it decides to pull back down. Drag that over. Essentially, that's how it works. Most of the time, your supply and your demand zones are going to be on larger time frames. This is just an intraday 5-minute. Let me screenshot this. And now we're going to delete everything. And we're still going to use Tesla, but now we're going to go to 4 hour. All right. All right, big reactions happen on Tesla every time it gets up into this area right here. Every time Tesla enters up into this yellow zone, this box, right? Every time it touches here, they freaking sell this thing to the downside pretty hard every single time. Which means if Tesla starts breaking above 355 on the 4-hour chart, if I'm not in calls, I missed the boat. I should now be looking for puts. Oh, dude, hold on. Actually, we'll leave this. This is pretty neat. We draw the box based on 5 minutes like right now, or maybe based on both, essentially. But mainly larger time frames. Okay, it's mainly always larger time frames. 5 minute, it's more levels because it's faster price action. Supply and demand are bigger zones. So since they're bigger zones, you need more time. So it's going to be mainly on 1 hours to like weeklies. All right, this is cool. All right, remember that giant Amazon candle? Go here, right here. See the big green candle? It's not a coincidence on where that was. Okay, see this giant green candle right here? Do you know why it's here? Okay. I'm going to mark this spot right here in white. Why? Because every time Tesla gets right here, the bears are stepping in, and they're just pushing it back down, and they're sending it back down to like right here, right? It's a little zone right here on Tesla. So Tesla gets this big green candle right here and rips through the zone. You think it's coincidence there's a giant red candle right here? No. Bulls overtook this zone, this level right here from the bears. They ripped it up higher, went to the next zone. Pulled back down. Giant red candle. Why? Why is there a giant red candle right here? Because the bears are taking their zone back. Now we're underneath the price action again. Bears are in control right here. You want to see something cool? All right. I bet you, right here on this chart, if I scroll to the left and keep going this way, this level right here is going to do an SR flip at some point in time. Oh. Big green candle. Rips to the upside. Comes back down, does the retest. What does that mean? Bulls gave the bears the middle finger, overtook this level, pushed the price action up higher. They even did it again. Giant green candle. Is it a coincidence? There's another big red fucking candle right here. I'm drawing so many arrows. Do you think there's a coincidence for that big red candle? And look at what happens with Tesla after that red candle comes in back right here to the downside. There's so many arrows on this chart, it's ridiculous. Do you see how important this white level is? They rip it to the upside, break and retest. That's important because now when it comes back down, when Tesla goes back up here and retest it, that's an SR flip. It was support over here that now just got flipped to resistance. This is how it works. Support. Demand zone is right here. It's right here. Until they break it. Until they break it. Which happens right here. Right? And then they retest it. Retest. Reject. Equals resistance supply zone now. And then they send it back down. Big green candle comes back in again, overtaking the zone. They rip it to the new zone that's up here. They pulled it back down. Bears are now overtaking the zone again, and we're going lower. This is all how the market works. Look at the big reactions that happen at this white freaking box. Whether it's above it or below it, it doesn't matter. It gives you entries on both sides. If you want a long Tesla, it needs to be above that white box and that white level. It needs to hold. If it's underneath that and it's retesting it like it's doing all right here, then you look to go short and take it back down until a giant green candle overtakes that spot and you lose on that trade. Until that point happens, it is shorts right here every single time. Look how important this box and this level is. That's how supply and demand zones work. That is how supply and demand works. Demand. Right here. SR flip happens here. And now it turned into supply. That is all how the market works. It's nothing more. It's that zone to that zone. Look right here. You see these upper wicks right here on Tesla? If you would have marked this zone right here on Tesla, if you would have marked that right there as supply for your resistance, and Tesla rejected and came back down, when it went back up there again, was a great spot to get puts for a rejection until a huge gap up happened, which I'm on the 4-hour chart, so it doesn't show it. A huge gap up happened here, and it broke above the zone. Drag it over. It retested, and it hit. What did it just do? SR flip. Wow. Now that supply resistance turned into demand. Support. Isn't it crazy? Isn't it just crazy how that works? It's just crazy. It's just freaking, it's nutty buddy. This is a supply zone that's up here. That's literally all the market is. It is nothing more than finding these areas and these boxes and watching stocks ping pong back and forth, break them and go to the next ones over and over again, whether it's higher or lower. That is literally all a stock market is. It is doing that over and over and over again Upside, downside, back into these boxes, doesn't matter. That is literally all it is. Your job is to execute trades when those areas are tested. When you play the breakout, if so, can you share thoughts on how to trade and where to keep stop? We kind of already discussed that. Your stop is when there's an invalidation of the technical analysis. If you're in calls off the support, if they close candles and start breaking that support underneath of it, then it's invalidated. That's your stop loss. Vice versa for the other side. Just like, remember the double bottom, the W? If it goes underneath of that and starts closing underneath that and you're in calls and you're red, that's your stop loss. It's when the chart thesis and the reason on why are you in this trade. So that's the thing. Ask yourself, why am I in this trade? I'm in this trade because there is a Morningstar reversal off this double bottom area of support. Cool, I'm in calls. 15 minutes go by, you got red candles closing underneath all of those things. Why are you still in calls? You should not be in calls. You should absolutely have sold those by now for a loss of whatever it is. That's your stop loss. How you manage the trade, if you're in calls, are hitting those areas of resistance above, which we're about to do now. For an example. So if you're in calls off support, you exit them and take profits at areas of resistances. In order to be a good bull, you have to know where are the bears, okay? So these are areas you would mark for any stock that you've ever traded that you need to draw out, yes. But there is a way to draw this out for something like SPY. This can be carried over so you don't have to keep doing this daily. 100%, yeah. So like this spot right here on Tesla, this zone is from first the rejections right here started right here. This is where I would have marked it. Common areas of big reactions. Remember this. I'm going to drill that into your brain. Common areas of big reactions. Mark them on your chart with a level, with a box. I don't care. Do something. When you see big reactions at the same spot over and over again, mark it on your chart. I'm telling you right now, it's the best thing you can do. So if I would have drawn this box right here on Tesla, drawn this level back in the end of March 25th and April 2nd, it rejected the exact same spot and got huge sells from 290 all the way down to 214. Tesla fell like $70 freaking dollars off this freaking rejection right here twice. All right. If I would have marked that, I would have had that on my chart from at the end of April. And then when it finally broke above it, when it came back down and retested it recently at the beginning of June, and I see all these lower wicks right here. See all these lower wicks right here. And then you even see some, I mean, kind of like a little hammer candle right there and one right here. All these lower wicks showing you that buyers are present and they're pushing the price action back up. And they close it back above the demand and the support right here. I am in calls. I would have had this level, had this zone already marked and still on my chart. If you guys don't have it turned on TradingView, right here, see where it says auto save right here? Make sure you turn that on. It means every single day, like when you close down TradingView, whatever levels or zones you have on your charts, it auto saves it on here. So when you open up TradingView the next day, the next week, everything's still on here. Make sure you have that turned on, 100%. So let's go do, what's a decent chart? I mean, AMD looks probably pretty decent. Hey, look, I drew this, look at this AMD chart. Look at this beautiful AMD. Look, it's at point C. Look, I should be short AMD right now. I should absolutely be trying to short AMD right here. 100%. I should be looking to short AMD right here. It's actually been on a freaking tear. Let's try something different. I don't really trade Meta. Nvidia hasn't really gone where that much recently. I don't believe so. This one isn't bad, but let's go to an intraday chart and let's do some chart management. Let's do a trade. All right, here we go. Easy day. All right. All right, green hammer candle right here on NVIDIA. Right, you can take some calls. Look at the big reaction. Big green candle right here, right? All right, you see this spot right here, and it rejects. Starts to come back down. Now we're rolling into lunchtime. All right, so first have to say this is all we have for the day. This is all we have on NVIDIA right here, going into noon. You have this low of day, big green candle that happened, and then you have that high of day right there. All right. So let's say you want to take another trade on NVIDIA. So you know you have resistance right here. You know you have support right down here, right? So it chops inside the range all day until that spot right there. All right. So now what I'm going to do is I'm going to look at this chart. You want to look for common areas of support or resistance. Okay. You see this right here on the left side of the chart? You see that right there? If you mark that level right there, it's a great level to have on NVIDIA. Is it to the freaking penny? No. But you get a decent reaction right here, right? It's a pretty significant level, all right? Another one is right there and how it lines up with that little guy right there. So if you mark that area right there, that's a nice little spot right there as well. So now, if you go over to NVIDIA right here, this is how I would have taken the trade. I'm going to make this one yellow. NVIDIA comes back up to the resistance right up here. I'm going to take puts. I'm going to enter into puts right here. Rejecting the same area again. Okay. You have a pre-market high area right there. You can almost use that entire zone if you want. Right there of resistance. We're going to go short NVIDIA here. My stop loss, if it breaks above the zone, I want to target down to low of day. Full target low of day. So now this, can I give me the arrow? There we go. I want to enter into puts here. Target 1, let's say I'm going to be up plus 15%. Stop loss at entry. When this spot right here hits, that level hits, target 1 hits, I'm at 15%. Stop losses at entry. Means I'm going to take some profit on here. It's hitting this level that we know seems pretty significant on NVIDIA. Looking at this previous price action, right? It gets good reactions off this area. So I'm going to take some profit here at plus 15%. Now that I'm taking profit, I don't let the trade go red or cost me money. It's one of my #1 rules. All right. Stop loss goes at entry. So if I bought them for $1 and they're at $100 and they're at $115 right here, I'm going to take some trims and I'm no longer going to let my stop be up here. I'm now going to put my stop back down to where I took the puts at. I'm not going to let it go all the way back up here and go any red. I'm going to move it down to here now. Target 2 is right here. I am out majority right here, which means I'm probably out half or more. This is full target. Because bulls are stepping in down here, this is a big support area. If there's big support right here, I do not want to be in my puts because they can freaking rip this thing back upside. That's why it's a target downside. I'm a bear. In order to be a good bear with my puts, I have to know where are the bulls at. So that is my full target right there. So this is how I would have taken and managed this trade. So initially, I would have taken the puts there with the stop loss at the top of the resistance in that zone. I would have targeted this level here of support. I would have targeted this next level of support, and then I would have targeted this level of support. And then once I hit my first target, I don't let the trade go red and cost me money. I move my stop loss down here, and then I manage it accordingly going down. That is how I manage and look at a chart, just using nothing more than support and resistance, knowing where the bull's sitting at, where the bear's sitting at, using them as price points to take my entries and my exits for my trade. There is nothing more. That is literally it. The chart tells you where to take an entry and where to take an exit, whether you're in calls or puts. If you can identify where the bull's sitting at and where the bear's sitting at, it will tell you where should you be taking your entries and exits for these trades. Why don't you really trade meta? Contracts are way too expensive and too volatile, and honestly, a lot of people in the Discord would complain because they couldn't get the same fill as me. So it saves me the headache. Essentially, that's it. Why do you think I don't trade names like Coin or MicroStrategy, right? MSTR. Why do you think I don't trade those names? It's so hard to trade those names and alert them because I can buy them for $270 per contract. By the time someone else sees them, they're at $290. People are going to complain. It's already up $20 per contract. But on a $270 contract, that's like 6.5%, which I get it. You're kind of behind. But those contracts, they're very volatile. They move fast. They're expensive. It's the reason why I don't trade those names. Snow is also on Casey's do not trade list. Yeah, I don't trade Snowflake. That's another one. So it saves the headache of people screaming at me because they don't understand how the options chain work on most of those names. And a lot of people don't like trading contracts that are very expensive. Like me alerting that I'm taking a trade on Meta and those calls cost about over $500 per contract. Not a lot of people are going to be interested in that. They're going to change their strike. Can we ask questions at the end? Yeah, 100%. Yeah. Another thing too is if those contracts are $500, right, and they're super expensive and people can't afford that and they don't want to trade those meta contracts, what are they going to do? They're like, I don't want to miss Casey's trades, but I can't take those meta calls because they're $500 per contract. So what do? They take a completely different strike or a completely different expiration that's cheaper. Do you think their trade is going to move the same as my trade now? No. Because now if I get stopped on mine for minus 8 or 10%, they took a farther out expiration, or they took a closer expiration, a farther out strike, right? Their trade moves a lot differently than mine because they took a completely separate one because it wanted to be cheaper for their account. Now, when I exit mine for a loss, I'm like, all right, sold the meta, took an 8% loss. Yeah, because they took those different ones, theirs is like minus 30 or 40%. And then they're screaming at me saying that they just lost a shitload of money on those metas. And I'm like, how? And they're like, well, it went the other way. And they're like, well, I took a different one. I took this week expiration instead, so I'm down 30%. I'm like, well, it's your trade. It is your trade. Know your risk and know your reward. You have to own up to it. So because of that reason, for certain names like that and expensive premiums, I don't trade them. It saves me the headache from that happening. So that's just in a nutshell. 0 DTE, yeah, right? I'm like, I'm taking, 14 DTE calls on SPY. They're like, cool, 0 DTE, let's go, Casey. And then I sell it for a 10% loss. They're like, fuck, I'm down 70. I'm like, what the heck is wrong with you? I know you exit a trade when it's invalidated, but is there a certain percent where you just cut no matter what? Yeah, when what's the far, if you're in Premium Discord, the farthest you usually ever see me hold a trade red is minus 20 to 30% max. Like Snapchat, for example. Okay? But here's the thing that people aren't thinking about. I don't know who in here in the mastermind is in Premium Discord that was in Snapchat calls with me the last few days. Those Snapchats were down 30%. Okay? Did I hold it? Yes. Why? because I preached it all freaking week. As long as it continues to hold above $8, I am holding my Snapchat calls. As long as it stays above $8. Go to Snapchat. Look, it's still here on the screen. Look, there's where I added the rest of my call position. Right? I took calls here off $8. The next day, it consolidated here for so long and just went sideways and died, right? The theta on those contracts burned the premium off of those, and I'm down like 30%. Is my chart invalidated? No. We never saw candle closes below $8. So I stayed in the position. What happened with Snapchat? Those 850s went deep into money. Snapchat almost went to $9 freaking dollars. Okay? So, what did I make on that return? I'll tell you right now. Let's go. You got here. For the ones that aren't in the premium Discord, well, I'm telling you, I'm putting my money where my mouth is. Okay? Let's go find out where I took Snap. I know I took it at some point in time. 625. Was it that far back? Let's go down here. Let's see where I decided to take Snap. Still in Snap. Right there. Still in Snap as well. Never lost $8. Was down 30% this morning, and I'm only down $3 per contract now, and I'm still swinging. Next morning, Snapchat. I was down 30%. I opened up to plus 40%. 122%. 154%. Okay, I got my final trims off on these things, on some other runners, at like 160, 165 max. Okay, so I knew what my risk was on the chart, and I knew what my reward was on the chart. So I was okay with losing 30% to make 100, because if I lost that, go to 850 to put those calls in the money, draw the risk to reward on here. All right. Risk to reward is 4 times greater. Look at that. I risked losing 30% to make 120%. And then obviously runners just went fucking parabolic. That reward right there is almost 8. So I risked losing, say $100 to potentially make $800. I sold majority halfway through that move. So that means my average risk reward on that was 4. So risk losing $100 to make 400 on the average. That is the only time where I continue to hold a position a little bit longer, is because it stays valid, but it's just taking too long. But I'm still seeing the buyers present, right? And I know by the time frame that I want that chart to play out. Like this chart had to play out by Friday, or I was going to close it. I wasn't going to swing it over the weekend, because you're adding more days over the weekend. It's just going to burn those premiums even more. So because of the strike and expiration that I decided to take for this trade based off the chart, I needed it to happen within a few days. I'm not holding it for weeks and waiting for that thing to freaking play out, because it's just going to keep eating away my money in those premiums. So that's where a lot of people, I think they get confused, is like, I want to take SPY calls, but I don't know what strike and expiration I want to take. It's like, well, what do you see on the chart? Is this based off a 5-minute? Is this based off a 15-minute, 4-hour daily? Like, it depends on what you see on the chart. If this is a scalp from a quick level to level, are you buying 2-week out contracts? No, it's a smaller chart, smaller time frame move. You don't need a lot of time on your contracts. Maybe you need weeklies, 4 DTEs maybe. Now, if you're taking a trade based off of a daily or weekly chart, yeah, you might need some, 2-week out, a month out expiration, because it's based on a higher time frame, right? It needs more time to play out. So you got to factor in a lot of those things. Snapchat was a great trade this week. It went a little bit down more than I expected, but that's because those contracts for that stock, they were very cheap. They were 29 cents. When's the last time I traded an option that was 29 cents? I usually don't trade anything that's under like $100 per contract, and those were 29 cents. And then I averaged down on them, down to 25, and then sold them at 65, right? Caught a big freaking move on it. when you trade first and take screenshot, you are so quick doing it, bro. I know. I take the screenshot and post the gains for you guys before I even secure them for myself, just so I have proof. Because people are going to be like, there's no way Casey got 18% on that trade. I'm like, here's the screenshot right here that I got for 18%. And then maybe I lose a few bucks because it pulls back down to 15 or 16 by the time I go hit the order and fill it. Happens all the time. It is what it is. All right. We're going to talk about something called the orb strategy, okay? This is something very, very simple. It is nothing more than a support resistance. I just typed in the same thing over top of that. This is nothing more than a support resistance strategy that I use within the first 15 to 30 minutes of the day, okay? So it's called orb open range breakout. So what I do is I mark the pre-market high and low, okay? Because price action after hours, like I said, I like to know those key areas. And then within the first 15 minutes, you mark the highest spot of the day and the lowest spot of the day on SPY or Qs, right? We're going to use SPY for an example. We're going to see what we can find. When SPY breaks out, either to the upside or to the downside of that 15-minute support and resistance levels that you just drew on your chart, you play that direction. So, for example, for SPY, let's go mark... we'll mark this low down here, right here. We're going to mark pre-market high, and that's all that we have. Okay, so now first 15 minutes of the day, 9:45. This is the highest candle so far, right here. This is the lowest candle of the day so far. When one of the two white lines break, I trade that direction. Right here. So based on the orb breakout, I take calls. What's my stop loss? If it accepts back into the orb, which is the opening range breakout area, which is right here. So I go long here. Okay. Pre-market high is right above. So is this ideal? It's not the best. If it comes back down, accepts back into the range, I'm out. So right now, risk to rewards is about 1-to-1, which isn't the best, but it's still neutral. Whoopsies, what did I just do? Ah, there we go. And I marked pre-market high because this is an area of resistance. So in order to be a good bull, I have to know where are the bears, which makes sense because look at the wick that SPY got right there. It makes sense. But then what happened? Bulls gave the bears the middle finger and overtook that spot. Look how SR flips work. Dude, I'm not shitting you. Just learn this. If there's anything from this mastermind that you need to be an expert on, it's this. Got flipped to support. Middle finger candle. SR flip. I think I spelled that wrong because I can't see it through my arrow just yet. Right there. This was resistance. Big middle finger from the bulls. They ripped it to the upside. So, if you missed the calls based on the orb breakout down here, when the bulls ripped through that resistance with the middle finger to the bears, when it pulled back down and gave you a green hammer candle bouncing off of that area, that is an SR flip. Resistance flipped to support. Supply flipped into demand. What do you want to see happen? Big move continuation. Look at this. That's it. There's nothing more. That's it. That's all trading is. All right, we're done with the mastermind. Have a great day. That's it. That's all you need. This is, I'm telling you, I'm trying to upload this file. Do you mark the pre-market high and lows or the extended hours high and lows, so including after hours the day before? Yes. Yes, I do. Yes, I do. Right there. So this is combining everything now. So now this is using a new strategy called the orb strategy, support resistance breakout strategy. First 15 minutes of the day, mark the highest price candle and the lowest price candle. When SPY breaks one of those two, play the direction, right? And boom, gets a 5-minute candle close, breaking above the white line, get the move to pre-market high, take a trim, move a stop to entry, right? Instant, another green candle breaking through that resistance, bulls giving bears the middle finger saying this is now ours. When they give the retest here and they hold it, that's confirmation. That is resistance being flipped into support. If I'm long already, that's what I want to see. That means my brothers, my bulls, we're still here. They overtook the zone. We're confirming that we are overtaking and holding it. The bears have no shot of taking it back right now. We're going to hold it and we're going to try and take this baby higher. And then they do, right? Absolutely perfect and beautiful chart right here. Now, let's go to the day prior. Ooh, this will be a fun one. This one gets invalidated. Oh, no, it doesn't. No, it doesn't, actually. Ooh, I thought I got invalidated. 9:45 is that big red candle. No candle close underneath of it. Would you look at the pre-market highs and lows, boys and girls? Look how the orb high matches up. And look how these lows match up. Look at this. Resistance. Support. Okay. 15-minute is 9:45 in the morning. Mark the highest candle and the lowest candle. It's actually the same big candle. That big red candle makes a high of day and a low of day in the same one at that time. 9:50 candle breaks it, buys it back up off support, and they close back into the range. No candle, just like this one over here. Right? Candle break and closed above the white line. That is an orb confirmation breakout. This one wicked underneath of it. Wicks don't scare me. I want to see candle closes. And it comes back into the range. So now I'm just chilling until what? Until I start seeing this right here. And then especially that bad boy that's right there. Now we're pushing above the resistance. What does that mean? Orb strategy says higher. So that's the orb high. This is your orb low. We get the break over the resistance and close over top of it. This is a breakout strategy. So yes, you are buying calls near the high, but it's based on either a break-in retest, which is fine, or an SR flip like the previous one before. It's not just chasing because it's ripping. You have to have multiple points of confluence. For this one, it's based off support and resistance. And then holy bejeebus. Nice ripper here to the upside. 2 for 2 back-to-back days. That was Friday and Thursday. The orb strategy worked. It did the exact same thing. It broke the orb high, closed over top of it, and ripped higher. Very, very simple strategy to use. I absolutely love it. I look at it just about almost every single day. Here's another something similar right here. After first 15 minutes, mark the pre-market low right here, pre-market high, and then this little red line, 434.33 was orb high, 433.61 was orb low, and a big green candle right here where this white arrow is says breakout. It broke and closed above it. Look at that, hit pre-market high, came back down, went back up. Added some resistance zone up here, came back down to the orb high area where the breakout was, and it held once, and then it also about retested it twice on the back half of the day. Big green reactions to the upside off that area. Very, very simple and easy strategy to understand. A lot of people still use this to this day. There's a free indicator on TradingView that plots all of this on the chart for you, which we can go ahead and cover that if we would like. Scroll down. Orb with price targets. Boom. It draws the orb right here. I got so many things on here. I do not need. Oh wait, I already got this one too. That's fine. There we go. So it drew the orb already. This is the green box, and then confirmation candle close right there above it, and then it rips it higher, and look, it marks the orb low. So it creates the box right here for you. Beautiful. Look, it even tested back half of the day and actually got a decent pop off that right here. But yeah, it's within the first 15 minutes of the day. Mark the high and low. This indicator right here does it for you. Let's go here, and where is it at? About this script. Orb with price targets by Get That Cash Money. I shit you not. I've actually sent this guy a message before and talked to him and told him that I loved his indicator. It's great. So it's called Orb with Price Targets by Get That Cash Money on TradingView. It'll put targets on your screen for you too, based on fib levels, which we're not going to talk about or cover. But it gives you price targets where to sell your calls at the levels above. Look, it even marks that same level right here that I manually drew on mine. Look, it marked a level right there for you for that confirmation where the bulls overtook that zone and then ripped it higher. Thank you, Liv. I mainly use it only on SPY and QQQ, but again, this strategy does work on all time frames, or not all time frames, sorry, all stocks. Orb range and extended hours and low, it seems like yes, yeah, because I use the extended hours price action, those hours all the time, because I'm a firm believer in that. Because futures are open. You got to think about that. Future traders are already open and making money by the time 9:30 rolls around. So if there's big spots that have already been tested prior, then I want to know where those spots are at for when I'm eligible to trade it later on that day. I think I might switch the TradingView. You need to. Switch the TradingView. I'm telling you, TradingView is the best. It's absolutely the best. All right. So we're not going to spend too much time on this one because a lot of people, if you attend any of my Sunday night sessions, you probably know how I do this, but we're going to do it anyways. So I want to show you guys how I find all my key levels. So like when I'm charting and I'm talking about like I got a level up here on SPY and it almost hits like to the penny, people are like, man, how did he know like those levels? Like, how does he find the area with those levels? Like, they're so freaking accurate. They're very close. I'm going to show you guys how we can easily find these levels. I'm just going to use Tesla again. We'll see how this example goes. So, I do this every Sunday night on the live stream. Or if I don't do Sunday night live stream, then I'll do it Monday morning in the pre-market. So, what I do is I start on the weekly, and I work my way down to my trading chart, which is the 5-minute time frame. So I start on the weekly, I go down to the daily, and then I go to the 4-hour, the 1-hour, the 30-minute, the 15-minute, and the 5-minute. I said it before, I mark all the key levels of common areas of support and resistance, all common areas of big reaction points, okay? And then when the day starts, right, I can add the pre-market highs and lows if I want to. And then if I see something intraday where it's getting a big reaction and I don't have that on my chart, I might need to. But this is what I do. I start on the weekly and I work my way down to the 5-minute. So we're going to go to Tesla here. We're going to look at Tesla here on the weekly. So this is what I mean. This is what you're looking for. Let me get the circle right here. You see this right here? You see this big move to the downside here on Tesla? You see how it happened again right here? That's what you want to see. This is what we're looking for on all time frames. We're looking for common areas of support and resistance. So I'm going to mark that spot there on Tesla. Does it need to be to the penny? No. Just make sure it's pretty freaking close enough, right? Here's a beautiful inverse head and shoulders. Wow. We talked about inverse head and shoulders earlier. Look at this. Beautiful. Remember I said mark that left shoulder, front run it. Look for buys off that for the potential freaking support. Boom. Wow. Look where I drew that level on Tesla. Wow. Look where a giant green candle comes in out of nowhere. Crypto, hit it. What am I about to say? What am I about to say, crypto? Go ahead. Type it is. Is it a... I appreciate you, CJ. Is it a freaking coincidence? No, it's not a coincidence. That's where that green candle is. Freaking gosh dang it, dude. Look, I'm telling you, this level is from January 2021. It's freaking like COVID high or whatever the hell that is, right? And it's still relevant back here in November 2024. It's not a freaking coincidence, I'm telling you. Beautiful inverse head and shoulders, big green candle right here. Bears giving bulls the middle finger, overtaking the area of resistance and sending Tesla on a squeeze higher. I'm telling you, man. Simple, keep it simple. That's the reason why this mastermind is set up the way that it is. Keep it freaking simple. Use multiple things of confluence. Add all these things together. All right. So now we're going to break it down a little bit more. Now we're going to look for, again, just keep adding areas of common support and resistance. 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 See right here? It rejected it 2 times in a row to create the inverse head and shoulders. You should mark that spot. Just mark that level, okay? That's all we're going to do is keep on marking these areas. I even like right here. There's a Morningstar reversal right here on Tesla. Look at that. Morningstar right there. Inverse head and shoulders. Look at this. A weekly inverse head and shoulders. In the right shoulder is a Morningstar reversal. You can even draw a trend line on this bad boy probably. Oh my goodness gracious. Trend line test. Inverse head and shoulders. Morningstar reversal. What else do you need besides me screaming full port Tesla right here in October of 2024? Everything's screaming right here to full port Tesla. Look at that. Easy, easy, easy. Let me take these arrows back off. Everything comes together just like that. Trend lines, candlesticks, chart patterns, levels, support, resistance, supply, demand. Add those together, make a shitload of money off this. Like, it's that simple. All right. I'm going to mark this high right here. I'm probably going to leave it at, actually, I'm going to mark this level right here too. That area right there is common area of resistance right here. It rejected here and right here. And then a third time right there. That's all you're looking for. All right. I think I would leave it there for the weekly. And then we're going to move down to the daily. Give me 1 second. I'm going to go get something to drink. Be back in 30 seconds. All right, I'm back. Oh, sorry, talking so much, I ran out of something to drink. All right, see where we're at. So this is all the main ones here on the weekly. I mean, I can nitpick it and go so far back, but where Tesla's at, I just like the range that it's in right here. I would mark the previous week high at least, and then just hit these lows. Hit these lows right here as well on all the bigger time frames, and just like keep it in that range right there. You see, that's what I would leave it as. And then you go to the daily, you'll see how these things work. Look. So I got a daily level right here on Tesla. Look at that big reaction right there. Beautiful. And then SR flip spot right here. Look at that. Beautiful. So now I'm going to nitpick it on the daily, see if we find any other ones that look pretty good as well. Right there, kind of where Tesla's at right now. Like right here. See that pop? And you see Tesla get another pop right here again. And then this giant red candle comes in afterwards. I'd mark that spot right there as well. Oh, look. Big green candle. Right here. To overtake it. Oh. Big red candles come into play right here. So this is an area where a lot of money, a lot of volume is coming in here on Tesla. So yes, that is area of importance. Look, big green candle came in, ripped up here. Big red candle came straight back down. Closed underneath of it actually now. So that is bearish for the time being on Tesla. We'll go over here. All right. See like this right here? Once you do this enough, you see that right there? Okay? You see this move up on Tesla? And then it comes back down. Where does it bounce at? Right there. Okay? If you were to have marked that level, you would have had it. Beautiful. All right, that's what you want to see. Let's drop it down to the 4 hours, see how our 4 hour chart looks right here on Tesla. All right, see, this is like where I would nitpick. Is it a coincidence? There's a giant green candle right here. No. All right, you see this low? I can add another level. I'm just probably going to move the other one up, but you see that right there? Like, I would be marking that right there. Like, that's big. That's a big spot right here on Tesla, right? 272.59. Let's go see how that works over here. Wow. Look at that. Beautiful. Is it like crypto keeps saying, is it a freaking coincidence that shit like this happens? No, it's not a coincidence shit like this happens. It's just how the market works. It's just how price action works. There's a gap right here. It's around like 310 kind of ish on Tesla. I would mark that right here. Okay, you see this reaction right here to the downside? You see this reaction here to the upside on Tesla? All right. If you mark that spot, look where the giant red candle in that came in over to the right is. Right here. Big red candle came in. Killed that bad boy down on the 4 hour. You're going to have a shitload of lines on your chart. You're going to have levels. But when you get to the 5 minute, they're going to be spaced out. Right? Look at this resistance all right through here. You see these big green candles rips to the upside, big red candle back to the downside. Right through the middle, right here. This is a big spot right here on Tesla. I would mark this high up here as well. Right here. A lot of consolidation right there. Look at this. Look. You see this right here. See all these upper wicks right here on Tesla? Draw it over. Look. Look at all those upper wicks on Tesla. Until what? Hit it, crypto. I'm just kidding. You don't have to type it again. It's not a freaking coincidence. Big green candle. Rips above this little zone right here. Closes above it. What happens? Next ripper to the upside. Bulls overtook it, right? Mark that zone. Put a level there. Put something. I don't care. Just do something. Tell yourself that you know there is significance when Tesla is at that price point. Go down to the 1 hour. All right, look at this. Now we're going to start really getting nitpicky on smaller time frames. All right. See this bounce right here on Tesla? Mark it. Watch. Ooh, Tesla low of day bounce on Friday. If you would have bought the fear, you would have caught that instant green candle rip right there, right? Why? That is support. That is support. That is Friday, June 20th candle low. That is low of day from the previous Friday. It's the same, and then Friday, a week later, Tesla hit the same spot. Tesla hit this level last Friday. Not yesterday, but the Friday before that, okay? Tesla hit this level, got a huge bounce and ripped upside. This is the first time Tesla came back down and hit that level since then was yesterday, this previous Friday. And look, instant green candle. That's how you can snipe it, right? Beautiful. Right here. Look at that reaction right here on Tesla. Look at this reaction right here on Tesla. Mark it. Okay? I'm telling you, when you mark this right here and we get down to the 5 minute, you're going to be like, damn. Look right here. Mark it. Look at that lower wick. Big green reaction, ripped it back upside. Lower bottom wick, big reaction, went back upside. You can even add up, look at all these upper wicks right up here on Tesla. Look at all of these upper wicks right here on Tesla. Sellers are present here. Put something on the chart. I don't care. Right across here. It's just shy of 330. I had 330 on the chart earlier. I just threw 329.56 on there. Right? Drop it to a 15-minute chart. So now this is what our chart looks like on a 15-minute. Look where we're at. Look at this. This is beautiful. You could have taken calls off this low, taken puts off the high. Beautiful. Beautiful. Price action. Nitpick a little bit more if you want. Right here, I like this. Look at this area of resistance right here on Tesla. Look at this upper wick right there. Draw that over. Look. 1, 2, 3 times. Mark it. Freaking mark it. 332.50 on Tesla right there. Mark that. If it hits that level right now it's at 322.71. If it rips back up and hits 332.50, Casey's shorting Tesla right there. Just letting you know. Way ahead of time. You're just looking for common areas of support and resistance. I think that's probably about it for where Tesla is at. You got this range over here that I'm not really putting there. Look, right there. Definitely get that. Look, SR flip. Big buy. Consolidation. All those candles closing underneath. What chart pattern does it create? During that consolidation that closes underneath the SR flip area. Creates a bear flag. It breaks back down. Bye-bye. And then it retests it the next day pre-market. And then flushes all the way back down, right? Chart patterns, candlesticks, supply, demand, support, resistance. Use them all together. Take trades. That's all you need. Don't make it complicated. We haven't even put EMAs on this chart. We don't have EMAs. We don't have VWAP. We don't have the KC algo. We haven't done any of that yet. That's the least important things. Those come at the end here in a few. Like, those are the most least important things. You need to be able to identify and take these trades with all of that stuff turned off first. Telling you. All right, drop it down to a 5 minute. Let's go look at Tesla. Look at this. So going into Friday, the price action on Tesla, we should have had some levels like this. And look how this would have played out. Nice. Very, very nice. Look. Low of day. Tesla breaks down, makes a new low. How many times did we see this? New low of day. What candlestick came in? What is it? What candlestick is this? At a big key level on Tesla, breaks a new low of day. What candlestick comes in right here? A freaking green hammer. What are you doing with a green hammer candle at the bottom of a downtrend? This was the first freaking thing we talked about this morning. It was the first candlestick, the first thing we learned about. And now we're over here near finding key levels. What are you doing right here? Going long. Where am I targeting? All those levels above. And that's how you take the trade. Look at that. And that's the trade on Tesla. You're taking calls based wherever I found this level. I didn't write it down or anything. This could have been weekly, daily, 4 hour, not 100% sure. We know it's a key level on Tesla. We found it going from the weekly and down here to the 5 minute chart, right? You get a green hammer candle at the bottom of a downtrend after a new low of day off a big key level. What are you doing with Tesla right here? You chasing puts or you getting calls? I'm getting calls. I don't know about you. Boom, target 1, stop at entry. Boom, target 2, out half, and then market closes. It doesn't even get a chance to go up to target 3 or 4, right? Boom, easy day. You see how I said earlier, you're going to learn something from topic 1, use it in topic 2, and then you're going to learn something new in topic 3, but you're going to utilize everything that we just learned from 1 and 2. You're just going to add it all into each other, get multiple points of confluence. That's what we're doing. That's all we're doing right here until the end of it when we have full freaking like chart setups with a bunch of, crazy shit going on. I don't know. All these other crazy things. Woo! MMK zones, yay. Like all these other things, right? That comes in the end. We need to understand how to trade and take trades just like this with nothing else on the chart first. Beautiful. All right, and now we have levels on Tesla from 100 to 488. But we mainly have levels from the 270s up to about 370. So we got $100 worth of levels with our main levels here between 317 and 335, right? Beautiful. And that is what I do on every single stock on every single time frame. Look at my SPY chart. Look at this. That's ridiculous. Whose eyes hurt right now looking at my chart? What is that even? What even is that? I don't even know. Calls. That's right. Yeah, like what the hell is even that? Like too many levels. Like it's absolutely ridiculous. My bottom level on SPY is 555.95. My top level on SPY is probably previous all-time high because we were just there, like 616.41. So I have levels from here down to 555 on SPY. So I don't have to add any of the levels on SPY until we see 555 if I don't want to. I already got all my levels. I love that, understand that now. They have meaning. Yeah, they are on there for a reason. Look right here. I mean, this is a beautiful chart on SPY. Look at this resistance right here. Breaks out, retests it, flips it to support. Boom, go higher. Right? Like, look at this big reaction right here. Morningstar reversal. Morningstar reversal off a key level on SPY. 610.91. You want to know something? Okay. For the people that don't believe me, look. Watch this. Watch this. Where is it at? Why am I getting lost? Oh, because there's a lot of people in here. What's up? All right, look. Want to see something funny? All right. Morningstar reversal right here. 610.91. Okay. I took SPX calls here, and this is just yesterday at 3 o'clock, right? 610.91. Morningstar reversal, which is bullish off this level of support of 610.91. I know for a fact somebody in the Discord asked me about that level. Look, 2 people. What levels yesterday at 249? Another person 2 days ago. Let's click on this. Full target on SPY, 610.91. I took calls in 610, 611. You know what the calls are? Right here. Another Morningstar that I took right here with a target of what I wanted of 610.91. Draw that over. That same level. Look, we talked about it in the premium Discord. Someone saw my SPY chart and had my levels already on here of 610.91 already on here on 626. Okay. SPY came back down, hit that same spot, and printed a Morningstar freaking reversal off that level. Level was already on the chart for me. I saw a Morningstar reversal, which is bullish. I was sitting in the parking lot outside my attorney's office after signing paperwork to sign over the deed on my house to the new buyers, and I saw this, and I typed it in the chat. Morningstar on SPY. Yesterday at 3:06 when that 5-minute candle closed. Look at it. I'm not shitting you. Yesterday, 3:06 p.m. when that 5-minute candle closed after 3:05, I took calls on SPX. Morningstar reversal. Look, they knew. Morningstar. Boom. Trimming. SPX calls up 30%. They kept ripping. Look, there it is. Pepsi was a good one too. Look, there's before and after. Calls went to $2,400. I'm not shitting you guys. The levels are already there prior, and when I see bullish candlestick patterns or chart patterns happen at these reaction spots and it lines up like that, I'm executing trades. That's all I'm doing. I didn't need an algo to tell me to buy here. I wasn't worried about 921 EMA, VWAP, TTM squeeze. No. It was a back test of a big level on SPY. A Morningstar reversal showed up at the bottom of a downtrend. I'm hammering calls, and I did, and that's literally it. That's all it was. Nothing freaking more. Easy. Don't overcomplicate it. Do you sometimes take SPX looking at SPY? I only traded SPX because it was power hour and it was Friday, and I knew I could make a lot more money on SPX off that Morningstar versus SPY. So that was the only reason. Most of the time, no. I don't take SPX or look at SPX. I chart and mainly just look at SPY. This is why I needed to help me draw out levels so I could stay informed and confident in taking or staying in a trade. It all makes sense. Love it. Look at Liv, Morningstar. Yes, it's the best. I'm in the Discord, but now I understand how the Morningstar and levels work together. Thanks. That's the goal. You're going to learn so much in this mastermind, and you don't have to take all of this. We're talking about multiple different strategies and things. You can use just chart patterns. You could be a supply and demand trader. I know people that just trade based off of candlesticks, or people that only trade off of levels, or only trade off of zones of support, of supply and demand. That's the beauty though of the mastermind. We covered all of those things. But if one of those things clicks for you and that works for you as a trader, your strategy or what you like, then that's all that matters. Find out what works for you. Candlesticks, chart patterns, supply, demand, or a plethora of those things. Add them together. It's completely up to you. What do you like? What do you understand? What fits your specific trading style? So I love when I see something like that. Someone says that I'm in the Discord, but now I understand how the Morningstar and those levels work together. That's what I want to see. I want to see you take some of this information, learn from it, be like, oh, that's why when you see this and this and this line up, 1 + 2 = 3, boom, execute the trade. That's why that worked out, right? That's the goal of the mastermind class. Education is all that it is. But when you get educated on all of these things, simply with, I'll use Michelle as an example, what she just said, so she can stay confident in taking or staying in the trade. What happens, the people that are uninformed, someone that is uninformed or not educated on something, when it comes to trading and they take a trade, they can get scared out and shaken easily because they're not confident, because they don't have a strong supported thesis for the reason on why they're in trade. That will lead that trader to fail. So what do you need to do? You need to get educated on all of these freaking things. Once you get educated on it, and you back test it and you find something that works for you in a strategy, you become so much more confident as a trader. You will start executing and sniping trades. When you do that over and over again, it will boost your confidence as a trader and you will start to excel. I'm telling you right now. And I'm seeing that right now with Michelle here in the freaking mastermind. And I love seeing these kind of comments from you guys because that is what it's all about. But people don't want to take this step. People don't want to sit down here with me or with us in this mastermind class for hours to talk about these things. They're like, just tell me where to, send this trade to make money and we'll try our best, right? And how far is that going to get you in life, right? Like how far in your trading career, blindly taking trades, not understanding the full thesis behind it, how far is that going to take you before you eventually start losing all of the money? Right? If you want to make it in trading, you have to get the information and get educated and get confident in all of those things. Those are the people that will last in trading. I'm telling you right now. Let's go, Michelle. Let alone a Saturday morning. I know that's right. I appreciate you guys. We're finishing up. Don't worry. We're coming into the last little bit. All right. We're in the last 30 minutes. All right. All right. So is there any questions real quick? So we're getting into all of the other things. We're going to go over risk management real quick, about how I size and manage a trade, talk about risk to reward. We're going to go over full chart setups, the one that I created for Webull, and then a free one that's very similar on TradingView, and then we're done. We've covered all of the foundation of being a successful trader. We've covered all of that. We talked about the candlesticks, okay? We've talked about chart patterns, which is nothing more than a combination of those candlesticks. We talked about the biggest and best thing out there that everyone in here needs to drill into their mind, and that is understanding support, resistance, supply and demand. You mark that on your chart, it will tell you where to enter and when to exit a trade. I promise you, okay? We talked about the orb strategy. That is a simple breakout strategy, okay, for upside and downside. Remember the first 15 minutes, mark that high and low. We found all the key levels of the common support and resistance areas where you see big reactions from the weekly down to your trading chart on the 5-minute, like we did on Tesla. We have all of these levels, right? That helps us execute our trades when we see specific candlesticks come in, when these areas are tested, right? We covered that. So now we're going to get into some other things outside of, putting those things on a chart before we get into the indicators, okay? So is there any other questions on those topics before we go ahead and jump into the last little bit? Imagine the extra gains just on long-term plays if you use these strategies. Dude, I'm telling you right now, these strategies work on day trade and swing trade. Everything we're covering is going to help on both. This class has kept me engaged for 3.5 hours and counting from 5:30 a.m. I was worried I wouldn't be able to focus. Oh, that's freaking awesome. I appreciate you. I try to keep this class interesting as much as I can because I know this is probably very dry material to some people. But the goal of this material, and what I'm going to talk about near the end, but I'll just touch on it real quick. The goal is to simplify the complicated shit. That is the goal of this mastermind class. So keeping you engaged and wanting to stay here and learn more and listen to me blabber on about all of this, like, I hope I was able to keep most people's attention. But the goal is to make it seem a little bit easier or more simple probably than what you've been led to believe about the market. So the market is very, very complicated. If you try to Google and self-teach yourself by reading online forums on how to trade options and all these other things that we've talked about, these strategies and shit, you are going to get your mind so blown and boggled around. It is going to be so freaking hard to stay focused or learn. So the purpose of the mastermind class is to take all of those things down, but honestly, break it down almost like elementary school style, right? Simplify it. That way I can get the information across to you guys in a way that makes sense. That way it's easy for you to understand and that you retain it and it wasn't overly complicated. That's the goal of everything here today in this mastermind. So if I can achieve that, that's really all I'm looking for, because I want that knowledge to get broken down a simple way for people to understand it and then be able to take it from this point forward and be able to execute the market and make money. That's the freaking goal. What time should wake to start looking at charts? Do you see a hangman on SPY 4 hour for my own invalidation? We'll look at that. I believe so. I think the daily close potentially bearish, but I'm not sure because of the way the market rallied at the end of the day, but we'll look at that real quick. Do you swing longer term options? I do. I'm in FSLR calls for January 2026. I have a few open positions right now with Gladiator here. So he has right here. Look at this. I mean, he's got AMD for 2026. He's got 2027 trades. So I do like these data dogs here. I took those with Gladiator for January 2026. So I do have a few of those. I don't swing like super far options. I'm not a leaps trader like Gladiator is, but I'm starting to do a little bit more of them or follow a lot of the ones that he takes. If I do my own homework and then I like them as well. I don't just take them because he's doing it. If he's alerting like Apple calls for January 2026, I'm like, okay, let me go check the chart on the larger time frame to see why. And if I agree and I like it after I do my own homework as well, then I'll take those. I saw there was another one before we move on to the next. Let me go back. I'm glad it's really helpful. So it'd be best to pick a few strong names and just rinse and repeat. It seems like that's a theme for most traders. Stick with SPY and QQ and a few strong leaders. Yes, 100%. Do not. I have a Webull watch list. Look at the top left corner. 237 names on this watch list. Okay, but these are all names that I've traded within the last like 4 years. Some of them are even delisted. I just haven't gone through it. But stick with a few starters. SPY, QQQ, IWM, and then pick a few Mag 7 names like your Amazon, Apple, Google, Nvidia, AMD, right? Don't be trying to trade, like 20, 30 different stocks. Like stick to the same ones when you first start out. Learn how they move. I love SPY, and I'm really, really good at charting and trading SPY because it's the first thing and one of the most consistent names that I've continued to trade and look at and chart over the years. So I feel really comfortable whenever I trade SPY because I've never like steered away from it. Hopefully that answers your question as well, Jay. It's just names that they move decently. So by that, it's tech. Tech usually leads the market upside or downside majority of the time. The Mag 7 names again. So your Apples, your Amazons, your Nvidias, your AMDs, things like that. And then obviously SPY, QQQ, and IWM. Everybody should be on those three names at least. You're really good at TA. Thanks for sharing this and sharing your valuable knowledge. I appreciate you. Thank you so much. That's me. I used to sell my options and profit so fast. I've gained patience over time, holding on longer and getting more gains. Fantastic. Taking profit early is one of the hardest things to get past because you see the green and you're like, man, I really want I really want to get that money back out. And I suffer from that as well. I'm an emotional trader. I know that about myself. It's the reason why I don't trade 0DTE options anymore. I'm really good at sniping SPY. Instead, I do futures now to kind of scratch that itch that I get whenever I want to scalp. But one of the main things that's going to help you, when you take a trade, don't look at your P&L, look at the chart. So, like for example, right here on Tesla, right? If I would have taken calls off that hammer candle, you see how the next candle's green? You see that pop up on Tesla? See that pop right here on Tesla right after that green candle? You're like, oh, I'm up like 8-10%. We're about to go pop up here and hit first target. Instant red candle right after that. How many people in here would have been like, oh, fuck, I'm screwed. Now I'm down like 6, 8, 10%, whatever now, and it's not looking good. How many people have been like, oh man, I should have freaking sold for profit on that pop right there, right? Probably 90% of people listening to this recording or in the Mastermind Live right now are probably going to feel that way when that happens. But look, if you would have stayed patient because it's still above your level, right, and it hasn't broken down and it has not invalidated the reason on why you're taking this trade, a green hammer candle off the support hasn't been invalidated. After that red candle, what happened? That's a freaking Morningstar reversal, by the way. Right here. We're still near low of day, near your green candle, and now a Morningstar reversal came in. And then what happens? Whee! To the upside, right? So don't look at your P&L. Don't look how much you're up. Don't look at how much you're down, okay? Focus on the chart. Look at the chart, watch the price action. As it starts to move up and get to your areas where you would sell it for a gain or cut it for a loss, then you look at your P&L and you go manage your trade that way, okay? But look at the chart and trust the chart in your technical analysis, okay? That's my advice. Don't go chasing waterfalls. Casey, thank you so much. I've learned so much from you. Now I have my 17-year-old son following and learning from you as well. Oh my goodness, that's freaking awesome. I appreciate that. Me, yeah, right? Yeah. My next goal is sizing more instead of 1 through contracts. Yeah. Sizing's the next hardest part of trading because that's where your mind and your emotions start to get tested again as a trader. The psychology aspect of trading and your the emotional aspect of trading come back into play. When you go from sizing, $500 per trade and you want to double that and you want to start making more money, so you start upping your size to $1,000 per trade. The thing is, can you handle the downside risk? Because now that you're increasing how much you want to size to make more money, you're also increasing the amount of size where you could lose more money, right? So since you're putting more money out there in the market, now your losses are no longer $50. Now your losses are $100. They're double, right? So your mind and your emotions start to get tested again. So I'm telling you, that's the hardest part of trading is when stuff like that happens. Just make sure you have a specific set of rules that you follow for your account, which I appreciate this talk right here and everything in here leads us to the next segment, risk management. All right, believe it or not, I think this is the easiest shit in the world, is reading a chart. I think everything that I've taught you so far is the easiest shit in the world when it comes to trading. I think because it's repetitive, right? We've talked about it, rinse and repeat, like Michelle said, right? Once you learn all of these things, the candlesticks, the chart patterns, support, resistance, supply, demand, the key levels, blah, 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 where to take entry and exits, right? On the chart, looking at it, I think charting it and knowing, hey, that's a Morningstar candle off support. That's a good spot to be taking some calls, right? And I think doing the chart technical analysis, I think this is easy because once you do it for so long, you're going to be able to do it over and over again on any stock, right? Any time frame for any trade. Now, again, I said I think that's easy. What's the hard part? The hard part is managing it. I think once people put their money where their mouth is, that's where things start to get a little iffy. So, again, emotions, psychology come into play here. And I think risk management is what's going to kill people. Well, I don't think it's going to. I know this is what kills traders. So we're going to cover something real quick. I'm doing the small account challenge. We just passed one of them. We're going to do the other one. I have a specific set of rules for trading. For the big account, small account, I think everybody should do the same. You should always have rules for how you trade, how you operate. It doesn't have to be the same as everybody else. You can develop your own. It doesn't matter. Just find one that works where you're not going to freaking blow up your account and lose all your money. Okay? And that should never happen. That's rule number one. So, this is how I started. Okay? So, for risk management, I use about 5 to 10% of my account per trade. Okay, depends on the expiry of the contracts, which means, is this a day trade? Is this a swing trade? Is this based off a 5-minute chart, a 4-hour daily chart, right? A lot of things come into play for strike price and expiration on options. Depends on the technical analysis on the chart, okay? Short-term or long-term trade. But always about 5 to 10% of the account per trade. So if my trading account has $10,000 in it, the max amount of money I will put into that trade on these options will be $1,000. That is the max. If I have 10 grand, I will never put more than $1,000 into a trade. Okay. I will average about 3 to 4 trades per day. I will shoot for 3 wins. If I take a trade at 9:50, we're good. If I take another trade at noon, we're good. I take a trade at near the end of the day, around 2 p.m., I get 15-20%, I'm good. I'm not taking no more after that. Now, I take a trade at 9:50 in the morning, it's red, I'm bummed. It's 11 o'clock right before lunchtime, I take another trade, I'm red, I'm bummed. I'm probably done for the day, right? 2 red trades before lunchtime, I'm probably calling it, right? You have to know when to walk away if the price action is just not there for your strategy, because you're not going to win every day. Not every trade will be green. Not every day, week, whatever it is will be green. You will lose. You will lose trades. You will lose money. Your setups sometimes will get invalidated and not work out. Does that mean you're a terrible trader? No. Does that mean you did anything wrong? No, it doesn't. Not if every time you charted something and you put money out in the market and it worked, we would all be fucking bajillionaires. We wouldn't be here on a Saturday morning learning about the market. We wouldn't care, right? But that's not the way it works. Not every trade has to work out. It will invalidate. Somebody has to lose. Remember this. In order for you to win on a trade, someone has to lose. It's the way the market works, right? The market is a revolving door of money being poured in and poured out of the market. When you're up on a position and you sell it back or buy it back, however you want to word this, right? Whenever you're positive on a position, in order for you to be making money on that position, somebody is losing money on the other end. And vice versa. When you're down 20-30%, somebody is against you right now and they're making money, right? It's just how it freaking works. There's always a winner, there's always a loser. You just have to win more than you lose. You also have to win bigger than what you allow yourself to lose. So now let's talk about scaling like profits or something, okay? So we're going to use this chart right here on Tesla because it's already here. It's perfect. Or I can do the SPY chart. It doesn't freaking matter. We got plenty of options. So let's say you have a $10,000 account and you're going to use a maximum of $1,000 per trade. You're going to buy 4 contracts at $250 a piece. Calls at $250. Right here, okay? Your stop loss is here. All right. Let's say this is trim 1 plus 15% when it gets up to this spot right here. All right. So I buy 4 contracts. All right. I'm going to sell one of them for plus 15%. I'm going to be at 1/4 position size at plus 15%, and I'd move my stop loss to break even. So before my stop loss was down here, we'll make it red. All right. Once we get up here, trim 1. All right. I have 3 out of my 4 left. I move my stop loss to break even, which is right here. I don't allow those other 3 contracts to go red. Okay. I will lock in a gain. Now, what you can do, completely up to you, if you left it at entry, okay, when it pulls back down and it comes to your entry, since you took a profit scale and you sold one for plus 15%, you can allow the trade to go a little bit lower to your stop loss, which will make those other 3 contracts that you have red. But remember, you trimmed one for profit, which means you have a little wiggle room to continue to hold the trade because you're risking profit from the trim 1. So if you bought them for $250, you sold it for 15% gain, whatever that math is. What is that, $35 or something, $37.50? You can let your contracts go a little bit red and lose $37 on that trade that's still open. And if it hits, right, then you risk the profits from that trim. Overall, you did nothing. You didn't lose on the trade. You did not win on the trade. The difference is when I trim at trim 1 plus 15%, when I move that stop loss to entry, those other 3 never go red. They go to entry. My trade is green because I took a profit scale at plus 15%. I locked that in and I did not risk that to go for further downside, okay? That is just a rule of mine. You do not have to follow it. It's just an option, okay? Now, target 2 hits. I sell majority of my position here, which means I'm out at least half, okay, or more than half. So now, target 2 hits. We're up here. Trim 2 for plus 25%, which means now I am out 3/4 of my calls. I have 1 left. What you can do here, all right, so trim 1, stop loss, move to entry. Trim 2, stop loss is still at entry, or stop loss gets moved to trim 1 in profit, which means if it rejects and comes down and loses this level right here where you took your first trim, you will close out that 1 call that you have left in profit for slightly green, which will keep that one green. You secured your other 3 contracts green. You're out of the trade for a profitable trade, okay? Again, that is just an option. You can always move that stop up at any point in time managing that trade, okay? Keep it at entry or move it up to a previous trim spot area right there in profit, okay? And then I would have 1 left, 1 runner, all out here if it hits, right up here near the highs, which Tesla closed right there and went flat, right? So never got the rest of the trim. Just say I'm out of all the calls right there. So this is how I manage and how I trade. Again, I'm not looking at my P&L. I'm not looking if I'm up $250 or up $550. I know when Tesla gets up to these areas of resistances, since I'm in calls, I should be taking trims here, and then I manage it that way. This is just a quick example of how I would trade if I was still trading with my original, like I had, of a $10,000 account at one point. Again, maximum $1,000 per trade. Try to get 3 wins for the day. If I get 2 losses, I'm done. But that's how I manage the position. If I buy 4 of them for $250 a piece, that's how I manage that $1,000 trade. Overall on this, my net profit is probably, if I trimmed 1 at plus 15, the other one gets stopped at plus 15, which means 2 got sold there. The other 2 got sold for 25. My overall profit on this trade is plus 20%, which means I made $200. And my risk to reward on that here is just shy of 4, which means for this trade setup, I risked, so let's type this in real quick, $1,000 trade. The risk is $50 minus $50. The reward is plus 200. That's how that trade worked out, right there. So I risked losing $50 to make $200. That is a great trade. That is a great trade. That is great execution. That is great job following the rules. Your reward is 4 times greater than the loss. So you risk $50 to make 200. I think this is absolutely is beautiful. So that's how I manage. That's how I size. Just for an example of a $10,000 account. All right. And I've talked about it before, and I'm not going to go on a huge long rant about it, but you need to understand what risk to reward means. People are like, I want to take calls here because of, X, Y, and Z. I'm like, okay, cool. What's your stop? They're like, I don't know, minus 20%. I'm like, that doesn't make sense. I'm like, it makes sense, but it doesn't make sense. You can't limit yourself to minus 20% because if the trade goes minus 20%, but the reason on why you took the trade is still valid, then I don't know, it kind of contradicts itself. You're taking the trade based on what the chart's telling you, but you're going to exit the trade based on what your feelings say about how much money you want to lose right now on the trade. So, like, I get it, but I kind of don't get it. Like, you have to know your risk to reward. The risk to reward just comes from when you take entry, you need to know I would sell it here for a loss because the trade gets invalidated. It shouldn't matter if the trade is down 5% or 25%. If you're in the Discord, okay, I have cut a trade before at 2%. I've been up 2%, I've been down 2%, and I closed the freaking trade because the reason on why I took the trade got invalidated. So why am I still in it? Right? That's what it comes down to. If the reason, the thesis for the why I put money into the market to take this trade is no longer valid, the money should get pulled out. That's what matters. So it comes down to knowing your risk to reward. And you also don't want to be taking trades where your risk is more than your reward, right? You don't want to be buying like calls all the way up here, right? Risking for it just to pop up a little bit, like pop up a little bit more, right? And just go right here, right? But you're like, my stop loss is low of day. So you're going to risk if Tesla pulls all the way back down to here. But you want to take calls for this little pop that's right there. Like, that's not how, whoopsies, that's not how that works. Like, you should not be taking trades that look like this, where it starts to break above this level and you're like, all right, one more pop up to right here. But if it goes all the way down to low of day, I would still be holding these calls. You're going to be up like 10% on the pop, but you're going to be down 30 or 40% when it goes back down to low of day. Why would you take that trade? That makes absolutely zero sense. That was a terrible risk to reward setup. You have to do the opposite, I'm telling you. So again, that comes with everything that we've learned. If you look at the chart, okay, if you look at the chart, everything we've learned, candlesticks, support, resistance, it tells you this is a good spot to go long, all right? And it also tells you when it gets invalidated, and if it gets invalidated, you cut it for a loss. So if you do the homework for the trade and develop your thesis, you know where to enter and you know where to exit. And as long as your risk is less than what your reward is, the reward should always be at least, I would say, 2 times greater. If you're going to risk $50, you better be able to make $100 off of it, right? That's just my rule. I think the reward should always be at least 2 times greater. And a lot of people, when they're taking their entries on positions, they're not assessing what their risk is. TradingView has this cool little tool that I talked about on the Friday free live stream. It marks it out, your risk to reward ratio for you. If you're taking a position, you should know what your risk to reward is, which means if it goes down this way against me, I know to sell it for a loss. And if it goes in my favor, I know where to sell it for a gain. Where you sell it for a gain better be 2 to 3, 4 times greater than where you would sell it for a loss. If you do that, you will always be freaking green no matter what. If you do that and you only win 4 out of 10 trades, you know you'd still be a profitable trader. I talked about it yesterday in the Discord. I said, if you take 2 to 1 risk to rewards, you risk losing $100 to make $200, right? If you lost 6 trades like that, but you won 4 trades, you know you'd still be green at the end of it, and you only won 40% of the time and lost the other 60. But by taking 1 to 2 risk to reward ratio trades, you would still be green. So now imagine this. Now you're a 70 to 80% win rate trader, okay, which is kind of what Casey Trades holds in the premium Discord, is a 70 to 80% win ratio, right? So we're just going to say 75, which means I win 3 out of 4 trades, okay? I'll win 6 out of 8. Imagine you do that, but you're risking 1 and your reward is 2. So my rewards are always greater than my risk, but now my win rate is 70, 80%. Now how much more green are you as a trader, right? Like, that's the freaking goal. You need to be consistent. You need to get that win rate up, hit the trades more than you lose them, but always keep the risk small and the reward greater. People don't freaking do that. When they're taking these trades, I'm like, what's your risk to reward? What's your stop loss? Oh, I don't know. Like, if it goes down low of day or minus 20%, but then they're going to exit full profit at 15% or up 10%. Like, I'm up 10% selling half. I'm like, but you're going to let that position drop 40% down to low of day? Like, it doesn't make sense. Like, you got to know risk to reward. A lot of people skip over that. I just talked about this. People ask me all the time, Casey, where should I enter? Where should I exit? Like, they're in the chat. Like, Casey, should I exit calls here? Blah, blah, blah. I'm like, I'm nice. I'm super nice. And I always help people out no matter what. But I absolutely hate that question. Because if you're asking me that question and you have money in the market for that trade, that means you have absolutely no idea why you're in that trade. Which means you're managing a trade that you took blindly, which is not the best thing to do, right? You need to have some sort of supportive thesis for the reason on why you took this trade and have a plan. You have to have a plan. If it went against you, where would you sell it for a loss? If it goes in your direction, where would you sell it for a gain, right? Why are you going to ask other people how to manage your trade or manage your money? You should never be doing that. You got to do that yourself, right? So again, if you look at everything we learned, all those freaking topics right there, trend lines, candlesticks, support, resistance, risk, reward, blah, blah, blah. You do all of that. The entries and exits present themselves right in front of your chart. Again, calls on Tesla, green hammer candle, morning star, off support. I'm in calls. I take them to my levels above, which will act as areas of resistances for targets. If it breaks that low where I'm taking these calls for the green hammer candle or the morning star, right, closes underneath there, I'm out for a loss. Small risk, lose $50. If it goes and hits my targets up here, I'll make $200 on my calls. That means my reward's 4 times greater than my risk. I should be able to say that to myself before I hit the send button to buy those call options. You have to draw this on your chart. How many times in the premium Discord do you guys see me draw arrows on the chart? I'm like, all right, I'm getting SPY calls here, and I want SPY to go here. I'm like, all right, like I'm taking calls on SPY right here, and I'm going to target right up here. And then I'm like, all right, now that we're above that level, I do the whole staircase thing. I'm like, all right, we're going from here to here. We're going from level to level, zone to zone. I talk about it all the time in the Discord. Why am I doing that, right? I'm doing that to show you how I'm managing my trade, because that's how I manage it. It's the proper way, in my opinion. That's the reason on why I do those things. I had a plan before I hit the send button to send those calls into the market and risk my money. I had a plan, and I'm just drawing that on the chart in front of everybody. You should be able to do the same thing before you put the money in the market, all right? All right, last 15 minutes here. We are going to go over 2 setups real quick, all right? Make sure there's, I've been understanding cutting the trade when it's invalidated, but on the way up. Do you watch the percentage during your trade just to know? Even if it hasn't hit first target on the chart, since that may be different. Yes and no. So again, I trade off my phone. For the ones that don't know, I trade off my cell phone and I watch a laptop screen, and that's how I trade, believe it or not. And I'm pretty good at it. I do glance over at my P&L every now and then, especially when it comes to the small account, because the small account is about compounding gains. So when I'm up like $100, $200 on a small account, I do compound those gains, and I keep the risk relatively around minus 50 to 75 bucks. So I try to watch the chart as much as possible, but I know we want to look at our broker and we want to see how much we're up on the trade. That's perfectly fine to do so. And if before it hits your first target, the trade's up 15, 20%, and you tell yourself, I really like those gains right here. If it was at my target and it was up 30%, I'd be taking a trim. But if it wasn't up 30% and it was hitting that target and it was only up 15%, would you take the trim? Yes, right? So if you're only up 15%, 15, 20%, and it's not at your target just yet, but you're looking at it and you're like, man, I'm up, depends on how you size. If you're up, say, $400 on the trade and you're up 25%, which means you could be like, all right, if I wanted to close out a quarter of my position right here, right, and lock in X amount of dollars, I'd be happy with it. Or again, like if you wanted to exit completely for whatever reason, right? You put $1,000 in, you're up 25%, you're up $250. You're like, I could use $250, and I don't even want to hold it any longer to go to these targets. Those are questions you just have to ask yourself as a trader. Again, it comes down to how much money is in your account, how much are you willing to lose, how much are you trying to make on this trade. Again, the best thing I can do is say don't look at your P&L, look at the chart. But I'd be lying if I say that I don't glance over and open up Webull and be like, all right, because I do it all the time on Discord. I'm like, all right, guys, I was up like 15, how many times? I'm like, all right, I'm up like 15% on the calls. We're almost there. We're like 2 cents away because I'll put an order on the premiums. I'm like, calls are at $198. I got to order at $2. Like, come on, just pop it up, right? I could sell at $198. I'm watching my P&L. I'm up nicely, but I'm like, I want that 200, right? That happens all the time. So when do you keep runners? Above 30 to 50%, I'm in runners. That's about it. So when I take the trade, I should have at least 2 to 3 targets upside. By target 2, I'm out half. By target 3, I'm in runners, which will usually keep my trade about that plus 30, 50% by that time. All right, let's go over this real quick. So we are going to talk about this Webull setup right here. I created this Webull setup a long time ago. It is one of the best setups. We're going to put SPY on here. It's one of the best setups that I've ever created. So we're going to go over it. We're going to look at the top chart right here first. All these little colorful lines that are on here. I'm going to explain to you what they are real quick and how I use them. All right, so the 4 lines you see on here, you see a blue line, an orange line, a yellow line, and a purple line, okay? The blue line is the 9 EMA. The orange line is the 21 EMA. The yellow line is VWAP. The purple line is the 200 EMA, all right? So 200 EMA in VWAP, 9 and 21 EMA. We're going to start with the 921 real quick. When the 9 and 21 EMAs cross over for a trend for upside or downside, which means my blue line EMA crosses above or below the orange, that can help me identify trend. So, for example, here on the SPY, let me cover VWAP. All right. Do you see that right here? You see how my blue line goes above the orange line? Right there. That is a change in trend because price action, the candlesticks were below. Do you see right here how it was red candle came in, closed underneath 921 EMA, and then it got a crossover right here. Blue went under orange and then downtrend. Do you see a big green candle that rips back above the EMAs, right? Blue line crosses over orange to the upside. Now we're going trend upside. You could have taken puts for the downside, and now you take calls to the upside. Cool thing about this chart, the orb strategy. Remember, first 15 minutes, that's the 945 candle high. The EMAs crossed when the 950 candle closed. So not only did you get a candle closing above orb high, you were getting a 921 EMA crossover to the upside. Look at that. How's that for confluence, right? Now, dude, so this is what I love about this shit. I'm sorry. I love teaching. Remember I said earlier, we're going to take trades with nothing on our charts, absolutely nothing on our charts. And I said EMAs, indicators, and everything come last because you use them as confluence. This is where the shit kicks in, okay? Everything we've learned so far, the indicators are the icing on the cake. That's the way I'm going to explain it. We've already baked the cake. We had the foundation of this cake ready to freaking go. Now, we're using indicators as a little razzle-dazzle, okay, a little frosting on top of this freaking cake, all right? So all the strategy we've learned without indicators, now we throw them on, and they add extra confluence to help us with our trade. So not only Then we have a nice push here on SPY, breaking above orb high, right? Nice strategy we learned about earlier. When that happens, 921 EMA crossover to the upside. Boom. That's all you need. Calls, right? Ripper. Straight to the upside. SPY holds these EMAs all day long. Look, every dip is bought. Every time it hits the 21 EMA, it's a long. Until it crosses and closes underneath. Long. All day. All day. All day. Uh-oh. Until this happens. Right there. What happened right there? Blue line crossed underneath the orange line. Right there. We are no longer uptrending. We are now changing trend to the downside. So now what do? Puts. Look what happens with SPY. Wow. Looky there. How could you have crushed SPY calls and puts in the day and caught the two biggest moves? You caught the entire biggest upside move of the day based off of a 921 EMA crossover. You also caught the biggest downside move of the day from a 921 EMA crossover. Look how simple that is. Very, very simple. Now, I'll bring VWAP in here. Little yellow line. I use this as a potential target. So that's all it is. Same thing with the 200, which is the purple line. I actually have 223 on here, which is EMP's EMA. He likes the 223. I like the 200. There. I use VWAP, the yellow line, and the 200 purple line as a target downside. So if I took puts up here for the crossover, nasty red candle comes in, comes down, hits VWAP. All right, VWAP is just, think of it as a moving average of support and resistance. It's a line that moves with the price action where the stock can bounce or reject at. Okay, that's all it is. It's a moving average of support and resistance. And then look at the 200, the purple line down here. Look where SPY bounced at. Perfect. That's a target downside. So, along with having levels on your charts for downside targets, look, here's the SPY chart. Look, I stream this every day, guys. We already knew this. Look, here's the crossover. It's on TradingView too. Let me take VWAP off. Look, there's the crossover right here. Look, here's the crossover right there. Upside and downside, both of them right here. I stream this every day in the premium Discord. Same strategy. I just developed and built this on Webull. And then look, comes all the way down. I have a level down here on SPY, but I have the 200 EMA right there above it. So it hit down there, you can exit, take some profit, right? I use the 200 EMA as the same thing with VWAP, right? It's just a moving average that moves with the price action where it can bounce or reject that. Very, very simple, all right? Now we're going to talk about these three indicators that are below the chart, okay? We have three indicators down here. One is called TTM Squeeze, which is my favorite. We have one called MACD, which is the one in the middle. We have something called RSI, which is this one right here, all right? So we're going to talk about, whoopsies. Make sure that was still streaming. I think it was. Make sure you guys can still see the Webull chart. All right. We're going to talk about RSI. There's three numbers when you're using the RSI indicator. RSI stands for Relative Strength Index. There's three numbers you need to know. That is 30, 50, and 70. All right. 30 means the stock is oversold and it needs to bounce. 50 is neutral. It's right in the middle. Don't worry about it just yet. 70 is the stock is overbought and needs to come down. So if the RSI is 30 and oversold and needs to bounce, what should you be looking at, calls or puts? The answer is calls. So right here, you see how it marks it right here? I have it marked. This is RSI, this bottom indicator. You see how it says 30 in orange? See how it says 70 at the high? You see how it goes below 30, creates this little cloud right here, drops under the 30 line? I should be looking at calls. SPY put that Morningstar reversal there on the chart where I took the SPX calls. When the stock was oversold and went under 30, and I would expect a bounce here when the stock is oversold and below 30 on the RSI indicator. When that happened, SPY created a Morningstar reversal. So you're telling me here right now. I got it on here too. Here's the RSI indicator right here. Let's go find 305 right here. 305. I got the blue line, the blue line is the RSI. The green is 30. The red I have on TradingView marked as 70. That means when it's below the green line, I should be buying green. When it's at the red line above, I should be selling red. So now, SPY, when it went under 30 RSI, when it's oversold and it should bounce, it created a Morningstar reversal. So you're telling me not only did we have a level on SPY of support of 610.91, not only did we have a Morningstar reversal candlestick setup off that support, we had an oversold RSI that was under 30, which means the stock is oversold and needs to bounce here. So you have 1, 2, 3 reasons now to be looking to get SPY calls, and that's the reason why I took SPX calls. And they went from $200 to $2,000, okay? Beautiful freaking indicator, okay? Vice versa. Look when SPY went above 70. It went above 70 at 10 o'clock in the morning. It went above at 11:50. 10 o'clock in the morning is right up here. It's these upper wicks. That's the reason why SPY stalled out. It's right here. SPY was overextended. After that big green move, RSI went over 70, which means do not chase calls here. When RSI is overextended, it's overbought. It needs to come back down. What does SPY do in an uptrend? If it's overbought, it needs to come down and retest the EMAs and then hold the EMAs, and then you can buy it there if you want to ride the trend upside. But you're not buying calls up here when the RSI is overextended. Don't chase it, okay? The other one was up here at the high. It was at 11:50, which you can articulate almost an evening star candlestick pattern right there. And then that was high of day on SPY. When the RSI was at 70, overextended, needs to come back down. Boom, comes all the way back down. That is how RSI works. Again, 30, 50, and 70 is all you need to understand. An amazing indicator. All right, another indicator is called MACD. It's this guy right here in the middle of the screen. You see the two lines that it has that are orange and blue, okay? And you see the red and green bars, okay? All it does is help you essentially with trend. So remember the 921 EMA crossover to the downside? Remember that it happened right here, right? EMA crossed over 921 to the downside. Go look at the MACD. Look, MACD actually crossed over. It went bearish here, went back bullish, and then it flipped bearish again at 1225. So look at this, 1225. It's right here. MACD, dadgummit, that's a big ass freaking arrow. There we go. MACD flipped bearish here. So SPY made a new high of day, was ripping right here, but MACD said, nah, I'm red right here. At the same time that the MACD flipped red, what was the RSI at? RSI was at 70. So you have a stock that's overbought at 70, which means it needs to pull back down and cool off. At the same time, that's TTM squeeze. At the same time, the MACD was flipping bearish, which led to an evening star at the high. So now, at high of day on SPY, you have the MACD that flipped bearish, okay? You have the RSI that's overextended and needs to pull back. You also have an evening star candlestick on the 5-minute time frame at high of day. That is 1, 2, 3 points of confluence for potential downside to come here on SPY. Easy as that. Next and last one is this guy right here, which is my favorite. It is called the TTM squeeze. It is nothing more than a little histogram That helps me find big moves on SPY and use in confluence with trend. Very similar to RSI and MACD. If they're moving up, right, and they're green, that means we're bullish. If the bars are red, that means we're bearish. So looking at the MACD here, this is where shit starts to get cool. All right, let me turn VWAP off. All right, this is how TTM squeeze works. You see the bars on the bottom? You see how they're red? Okay, that means we're in a downtrend. When the bars flip from red to orange, that means it's cooling off. That means it went down far enough and it's pushing itself back up, which means it's either pushing itself back up for one of two reasons. One, to go neutral and then go down a lot lower later on, or to come back up and flip positive and be bullish. So now you look at the bars, they went from red to orange, and then you see how they flip light blue here, greenish, I guess, but we're going to say light blue. All right, this is where things come together. Orb high is the white line. 921 EMA crossover happens at orb high. Right here. On the 955 candle. You know what happens on the 10 o'clock candle? The TTM squeeze indicator breaks the neutral line, which is just the blue line that runs right across the middle that separates the bars. Instead of rejecting there and not flipping to the light blue and then going lower, it did flip light blue, which means there's a trend change right here on TTM squeeze and it is moving to the upside. So now you have orb high breakout, 921 EMA crossover to the upside, positive flip on TTM squeeze indicator. Now let's go look at MACD. MACD was green. MACD flipped green 15 minutes prior. 10 minutes prior. MACD flipped green at 9:45. Let's go look at the RSI at 9:45 to 9:50. 9:45 RSI is at 53. 9:50 RSI is at 56. It's above the neutral level, which was 50, which means since it's neutral and everything else is showing bullish and wants to go upside, we can take calls and take it to the upside. Now, this is what's pretty cool. The RSI was at 56, right? Remember the number I said when it gets overbought is what? 70. So now it's kind of cool. If you have the TTM squeeze that's positive, that flipped green, you have the MACD that's positive, that flipped green, you have the 921 EMA crossover that's bullish over the orb high break. All of those things, bullish signs, right? You're like, okay, when the RSI hits 70 and it's overbought, what does that tell you? It needs to pull back down and cool off. So what should you be doing with your calls that you're in when the RSI was at 56 and now that it's over 70 and the stock's overbought and you're green on your position? What should you be doing? The answer is taking profit because the stock is now overbought. So it tells you, hey, if you're using the RSI indicator, this is probably a good spot to lock in some profit because we're getting overextended. So now it went overextended at 10:05 and 10:10, which is the high of this candle, which is perfect. So RSI helped you exit the trade right here near these highs. MACD, TTM squeeze, 921 EMA crossover, and the orb high break strategy all told you where to get in the calls for your entry. And then RSI told you where to exit. This setup, this chart setup, this strategy is like the best. I developed this years ago. It's one of the absolute best freaking chart setups of all time. I absolutely love these indicators. We're at 12:30. I'm going to quickly go over it again over here on TradingView. This is the TradingView setup with those same indicators. 921 EMA. VWAP right here, 200. And then you have TTM squeeze right here. You have MACD right here and RSI. All of these are also on TradingView. They're all free indicators, okay? All these are free indicators. So one thing I'm going to teach you real quick about TTM squeeze, the reason why I use it on TradingView, you see right here, You see how it went from blue to red, okay? That is price action coming down. Do you see the little red dots in the middle right there? See the middle, see the red dots? You see how there's red dots, then there's black dots, and then there's green dots? You see that the red dots right there? That means the stock is in a high compression squeeze and a big candle or a big move is coming. So now, this is the last thing I'm going to teach you on this setup, all right? TTM Squeeze Indicator, TTM Squeeze Pro by Beardy Fred on TradingView. This is what I use. TTM Squeeze is moving to the downside. The red circles are popping up right here, which means a big move or big candle's coming. Go look at MACD. What's MACD doing? MACD's red moving to the downside. Go look at your RSI. What's your RSI doing? RSI just hit 70. And what is it doing? It was overbought and it needed to come back down. So now RSI was overbought coming down. MACD flipped bearish coming down. TTM Squeeze is also coming down, telling you, hey, I'm also in a high compression squeeze right here. We might see a big move. Go to the chart. That was at 110. Let's go to the chart and go to 110. The 110 candle is right there. That's the 110 candle. That little green candle right there is when all of those indicators down here lined up to be bearish. What happened 10 minutes later on the 120 candle? 921 EMA crossed over to the downside. What happened with SPY? What'd I just say? What does that squeeze indicator do? Hey doofus, big move, big candles coming in. Ba-boom. Flushed it straight down. I'm telling you right now, this setup, this chart setup is the, if you're gonna rely on indicators and have a solid chart setup, the one I just taught you right here on Webull and TradingView, this is the thing to use. This is my freaking secret weapon in the world. I'm telling you right now. All right. And that's it, guys. There's also these other free ones. They're called SATI Pivot Ribbon and SATI ATR levels. I'm not going to cover those. Not too many people use them anymore. It's the same thing. It's just another way of using the EMAs. They're free indicators. But TTM Squeeze Pro and SR Channels by Lonesome the Blue. I'll cover that real quick. It is right here. It's this one right here. So SR Channels by Lonesome the Blue automatically finds areas of support and resistance and marks them red and green on your chart for you on every stock on every time frame. It's amazing. How do I hide drawings? There we go. So look, I was coming over here. Liv's already doing it. So there's Liv. Go right here in the chat, guys. Liv, you're the best. So look, there it is. TTM Squeeze Pro by Beardy Fred. That's the indicator that you need. Support resistance channels by Lonesome the Blue. Liv, you are the best, and I seriously need to hire you and get you on my payroll. You're the absolute best. Those are both of these indicators right here. On TradingView, both free to use. Absolutely love them. I use the TTM Squeeze Pro every single day, and then this is the SR Channels by Lonesome the Blue. This is SPY 5 minute, okay? Look, SPY 4 hour, watch it change. Look, and then zoom out. Look, it marks channels for you. Go to the daily, does the same thing. Look, it marks all of those common areas of support and resistance and bounces right here for you in front of your face. So if you don't want to manually go find those levels and you want to use an indicator to do it for you, this is a great one. Does it find all of them? No, it does not. Does it find the big ones for most of the time? Absolutely. So that's a great indicator. Liv just put it in there for you. Right there. Those two, those are the ones to use. That's it, guys. That's the end of the mastermind. I appreciate you guys. We're right on schedule, right at 4 hour mark. Try not to go over. We started right at 8:40 and it's 12:37. So we talked about candlesticks. Holy shit, we came a long way. Regular hammer candles, morning stars, evening stars, shooting stars, blah blah blah. double tops, double bottoms, the M for Casey's, and the double bottoms for Wombos, head and shoulders, inverse head and shoulders, how you can trade those, bull flag, bear flags, support, resistance, draw those freaking lines on your charts, draw these zones. SR flips are your best friend. Look at those middle fingers in the middle of the screen from the bulls and bears when they overtake those areas. Highlight them on your chart. The market is nothing more than moving above and below all those areas, and you trade it both ways. The orb strategy, 15-minute breakout, mark the high and low. I just use that for a good example on the Webull charts with all those other things of confluence. It's a great strategy. Finding those key levels, starting on the weekly, going down to your 5-minute chart, marking all those areas of common support and resistance areas, leave them on your charts. Risk management, just quick example of a $10,000 account, $1,000 per trade. We use that Tesla chart there for scaling out those contracts on how I would manage it. Knowing risk to reward, right? Minimize your risk and then maximize your reward. Make sure you're taking good entries, buying calls at the low and buying puts near the high when you see those setups. Only buy calls at the low when you see something similar to like the SPY chart, right? The Morningstar reversal that's off the support. Remember, multiple things of confluence. That's what this is about. All right? Remember, you got TTM squeeze, MACD, EMAs, candlestick patterns. Use all of those things. When you see like 5 or 6 of those things line up, you got TTM squeeze moving upside, that's firing a squeeze. You got MACD, that's positive. You got RSI, that was at 30, oversold. It needs to bounce. SPY is hitting a support level, and you get a Morningstar candlestick pattern. Holy shit, that's like 6 reasons to get calls. What more do you need, right? I mean, multiple points of confluence, small risk, high reward setup, right? When you do that, you know where to enter, you know where to exit. You did all the homework that is right there in front of your face, all right? That's mainly it. What do you mean when you say tick internals? Yeah, we'll go over that real quick. I'll screenshot this. So if you're on TradingView, I'll go ahead and mark this. Here, I'm going to screenshot and mark this for you. Hide indicators. There we go. These are the 4 things you should be watching if you're trading SPY and QQQ. I'm going to screenshot this. I'm going to put it right here in the chat. How do you see Vol-D on TradingView? Type in Vol-D. Being dead serious. That's it. Right there. Those are the 4 that you need. Go up to the top right here. Type in Vol-D. It tops up. You got Vol-D. NYSE UVol minus DUVol. All right. The first one's Vol-D. The next one is Vol-DQ. Essentially, Vol-D is for SPY. Vol-DQ is for QQQ. It shows essentially money coming in or out of the market. All right. I'm not going to spend a lot of time on this because it's not part of the mastermind. But you put a line in the middle of the chart at 0. I'm telling you, put 0. All right. When Vol-D is above the 0 line, you should only be thinking about calls because that means the internals are strong and the inflows are moving to the upside. So positive, right? Money's coming into the market. This is positive right now. You should not be looking at puts or anything else. You should be thinking we're trending and looking at dips to buy, looking at opportunities to go long. When it flushes and goes underneath the 0 line, or if it's underneath the 0 line here, you should be now looking to go short. That's really all Vol-D and Vol-DQ is. Tick, type in tick, literally T-I-C-K. It is tick, NYSE cumulative tick. Click on that. Go to the 5-minute chart, put the 0 line in there. Put plus 800 to 1,000, put minus 800 to 1,000. It's similar to RSI, okay? Remember you have 30, 50, and 70? You have neutral, overbought, and oversold. Tick works the same way. When it gets to plus 800 to 1,000, the stock is oversold, and you can expect a rejection on SPY, all right? When SPY is selling off hard and the tick goes to minus 1,000, you can bet your ass there's probably going to be a bounce soon. So if SPY is hitting support and gets a Morningstar reversal and the tick just went minus 1,000 and it's bouncing back up, that means it's freaking time to look for some calls, right? It's just another thing for extra confluence. Thank you so much. This class is always awesome and learn something new every time. Appreciate you. Let me go ahead and end this recording in 3, 2, 1.